Hello students, this is your Professor CA Vishnu Vardhan for Indirect Tax Laws at JK classes. This video is mainly for covering all your amendments which are applicable for your November 2023 exams which were given as per your statutory update of ICAI. And my dear friends, if you have seen properly, the statutory update given in your ICAI website covers the amendments which were applicable even for May 23 exams as well as November 23 exams. So in this video, I am going to cover the entire statutory update, which was obviously covering the amendments for May 23 exams as well as November 23 exams. Because in any case, if the amendments are tested as an adjustment in your exam in any problem, I don't want you to lose even that single mark, or you should not be wondering about that adjustment, and this will work as a complete brush off all the or recap of all the amendments which are applicable for your exams. So with that agenda, we are going to proceed further in this video. So chapter by chapter we are going to discuss the amendments applicable for your exam. So you know there are 10 chapters, and those 10 chapters we are going to deal here. And first chapter, if you see, there are no amendments as such like which are so going to worry you. So here the only thing is the GST compensation cess has been extended till 31st March 2026. That is the only amendment from this particular chapter, right? Going to the next one, chapter number 2, supply. And in supply, see, there are certain issues for which the clarifications and circulars have been issued by the department. So what are there? Let us see them. So the first one. So here the first issue is, the doubt was regarding the perquisites provided by the employer to employee, whether they are leviable to GST or not is the doubt. Now my dear friends, first of all, please understand, this is a simple clarification or simple concept where we should understand. You have already seen Schedule 3 talks about employee providing any services to the employer in the course of employment are neither SOG nor SOS, that is neither supply of good nor supply of services. So the salary what they are drawing from the employer is obviously not a supply. The same way here also, the perquisites what the employer is paying to the employee, providing to the employee, if those perquisites are provided in the course of employment, the simple logic is whether the perquisites are provided in the course of employment or as per the contract of employment. If the answer is yes, then it is not supply. So simple, perquisites if they are provided as per the contract of employment, it is not a supply. If any perquisites which are provided outside the contract of employment, obviously it is a supply and hence taxable under GST. So simple clarification it is. Now going to the next one, this is little bit important and little bit lengthy concept where the question was regarding, sir, whether GST is applicable on liquidated damages or any compensation or penalty arising out of breach of contract or other provision of law. See, why this issue has popped up, first we should understand. So we should understand why, because the reason is, see, if you go through Schedule 2, it says agreeing to an obligation or refraining from an act or tolerating an act or a situation or to do an act has been specifically declared to be supply of service. That means you are either agreeing to do something or agreeing to refrain from doing something, that is agreeing not to do something, or tolerating to do something, then it is treated as supply of service. So the doubt here was, we are paying this liquidated damages you call it or penalty you call it, whatever it is, when there is a breach of contract. So, sir, whenever there is a breach of contract, the person who is breaching the contract is paying this liquidated damage or penalty, whether this can be called as consideration for breach of contract. So, can we call it as supply of service? So, earlier the people were treating it like supply of service only, but now the department has come up with a clarification on this, saying that, see, look at this. Here the fundamental point is simple, my dear friends. See, understand, here they have given various examples. First of all, you are agreeing to do an act, and for that you are getting some consideration. Let us assume I am agreeing to take lectures for you, for that you are paying me consideration. A doctor is agreeing to treat you, paying consideration. So these things are supply of service, fine. And they have given some examples regarding that. Refraining from an act. So refraining from an act means what? Sir, we are agreeing, both the parties are agreeing, there one party will not do something and the other party will pay consideration for it. See, for that we can see the examples here. Two examples they have given, where a builder is refraining from constructing more than a certain number of floors even though permitted to do so by the municipal authorities, against a compensation by the neighboring housing projects which wants to protect its sunlight. That means, see, for example, here there is an apartment, and next to this apartment we got permission to construct. We got permission to construct, let us say 1 2 3 4 floors. But if you construct 4 floors here, this particular apartment will not get sunlight. So what this apartment people are doing, they are paying consideration to you. They are paying consideration to you, and hence you are agreeing not to construct this extra floor so that their sunlight is safe. They will get that sunlight which is for the purpose of that building or the people who are staying in that. So that means what here, even though this building owner who got the permission, the construction company who got the permission from the prescribed authority to construct 4 floors, they are agreeing to construct only 3 floors because they are getting consideration from the other building to protect itself from sunlight. So they are paying the consideration, and this building is agreeing not to construct the 4th floor. So these type of things. So that means, please understand here, the basic concept is, I am agreeing to pay you consideration. In return of that consideration, you are agreeing to do something, or you are agreeing to refrain from doing something. That means you are agreeing not to do something, or you are tolerating something. Whatever I am doing, you are tolerating it because I am paying you the consideration. So if you see the logic here, see, two things are important, my dear friends. One is agreement, the other is consideration. Agreement should be for what? Agreement should be for doing something, or refraining from doing something, or tolerating something. For that you should be paying consideration. Then only we can call it as a supply. Sir, why are you teaching this concept, sir? Because the concept is related to, the doubt is related to breach of contract and the damages paid for that. And in the process of answering the query of breach of contract and the damages paid, whether it is supply or not, the department has also clarified various other things. Before going into that, we should have a basic understanding of what we are going to see. So the concept is simple. There is an agreement, and the agreement is for what purpose? Agreement is for doing something, or tolerating something, or refraining from doing something. And for that purpose, you have paid me some consideration. Then we call it as a supply. So the main interesting thing here is agreement, and that agreement should be, I am agreeing to tolerate something, I am agreeing not to do something. For that you are paying consideration. Then only it is called supply. Hope I am clear for you. So now let us see various cases here, one by one, whether it is supply or not. Now simple, first one, if you take the first one, liquidated damages. As you know, why liquidated damages are paid, my dear friends? Sir, liquidated damages are paid whenever there is a breach of contract, and because of the breach of contract, the opposite party has incurred any loss or damages, or for any injury caused to him. To compensate that, we are paying the liquidated damages. You tell me whether there is an agreement to tolerate your breach, or is it like, okay, we'll let us enter into the contract, and tomorrow you breach the contract, you pay me damages, I will be happy. Is that the agreement between you people? Why are we bringing this liquidated damages into picture? Sir, we are bringing this liquidated damages into picture. Suppose if there is a breach of contract in future, because of you breaching the contract, if at all I have incurred any loss, you should be paying me that compensation. With that agenda, we are bringing liquidated damages into picture, not with an agenda of like, okay, I am agreeing, okay, tomorrow you breach the contract, no problem, pay me this much amount. Is that the contract we are entering? No. We are not agreeing to tolerate the breach of the opposite person. Please understand. Here, liquidated damages are coming only to compensate the injured party because of the breach. So there is no agreement here for tolerating that. So that cannot be called as supply. So it cannot be treated as consideration for the supply. So this is not taxable. Hope I am clear with this. This is the first point. As I told you already, I repeat, the clarification has tried to clarify various similar type of issues where the doubt was regarding liquidated damages for breach of contract. So we have seen. So what is the basic concept? Again I repeat, sir, first thing, there should be an agreement for tolerating something or not doing something. Further, there should be some consideration, then only we can call it as a supply. If there is no such agreement for tolerating something, but just money is flowing because of any other reason, then it cannot be called as a supply. It is not taxable. Now, so they have given various examples here where you are breaching the contract and paying the damages. So obviously there is no agreement to tolerate that act, so there is no supply. And the same way, there is one more clarification, that is regarding what? Check dishonor, fine or penalty. So you are giving to one fellow a check and that got dishonored, and when there is a dishonor of check, obviously you know the bank will levy some charges for dishonor of check. And now whether that charges, the bank charging from you, is it the consideration you are paying to the bank for tolerating your dishonor of check? Obviously no. Why they are imposing the charges on you? Because to discourage you from issuing checks just like that. Okay, take the check even though you don't have the balance. Correct. So it is not like we are paying consideration to the bank so that the bank is tolerating us giving a check and it gets dishonored. So that is not the case. So here also obviously there is no agreement between you and the bank to tolerate the dishonor of check. So hence it is not a supply and hence it is not taxable. Hope it is clear. The same logic applies even for whom? The penalties imposed for violation of law. You imagine you are driving a bike without helmet and some traffic police is catching you and imposing some penalty on you. Let us assume some 1000 rupees for example. Can we say that we are paying consideration to the traffic police for riding a bike without helmet? Obviously no. So that means, sir, whatever the penalties we are paying because of violating the law, we cannot say that, sir, this is the consideration I am paying to you and let me allow to violate the law. So lawmakers are not agreeing to tolerate the act of you violating the law for some penalty. So here also the same story, there is no agreement to tolerate you people violating the law. Please understand, here we are imposing penalty not to tolerate you violating the law, because to punish you so that later on you will not violate the law. That is the agenda. Here there is no agreement to tolerate you people violating the law. Am I clear? So here also the same story. The penalty imposed for violating the law is not a consideration agreeing to tolerate your act. So there is also not a supply, hence not taxable. Hence not taxable. So they have given again various examples regarding the same, the penalties imposed on various occasions. The concept remains the same. Now coming to the next one, coming to the next topic in the same thing. So forfeiture of salary or payment of bond amount by employee. What it is actually? See, normally you people will be knowing that whenever somebody is entering into an employment, majority of the cases, the employer will ask them to sign a bond. That is, they will stay with them for at least a particular period. Why? Because we are incurring so much of cost in training him and giving him the exposure. Suppose if he is leaving the job in another 6-8 months after learning the entire work, or after 1 year, 2 years, whatever the cost we have incurred on him to train him or to teach him the works, etc., etc., and to give him the exposure, that is nothing like going to be waste for us. And also again we have to incur the cost to hire the people conducting the interviews, advertising, that same story. So the point is to discourage the people who are not serious about employment. What the employers will do, employers will have a bond with the employee who is coming into the company, that tomorrow if you leave the job within 3 years, let us say for example, within 3 years if you are leaving the job, you should pay us 1 month salary as the penalty. or we will forfeit 1 month of your salary. Like that, they have put some condition in the employment contract. Now, that amount which has been forfeited from the employee's salary, tell me whether it is consideration the employee is paying for quitting the job before the prescribed period. You have agreed to work for 3 years. You are quitting the job before 3 years. For that, employer is deducting your salary. Whether that salary deducted, can I say that, sir, this is the consideration I am paying to you so that I can break the bond between you and me? So is it so? Again, the answer is no. There is no agreement between employer and employee where employer is agreeing, okay, fine, you pay me this amount and you leave within this particular period, I'm okay with that. That is not the case, sir. Here we are trying to compensate the injured party. Employer is being injured because the employee is leaving the organization well before the prescribed time limit as per the bond. So here we are trying to punish him. Understand, my dear friends, one more logic simple. When you are breaching the contract or when you are paying some consideration as a punishment, then it is not a supply. Why? Because they are not agreeing that, okay, you breach the contract, you don't do this, I will tolerate this, for that you pay me this consideration. Like this, there is no agreement. They are punishing you because of your doing some breach or committing some breach. Then such cases, simple understanding, it is not a supply, not taxable. Am I clear? So the same story here also. What is that? Premature termination of contract of employment where the employer is forfeiting your salary is not a supply, not taxable. Now, the next one, late payment surcharge or fees. Late payment surcharge or fees. If you see this late payment surcharge or fees, what it is? See, normally when any person is selling some goods or services to you, they are giving you a credit period, let us assume some 30 days. And they say after 30 days if you are paying, within 30 days if you are paying, no problem, fine. But after 30 days if you are paying, please understand, then for every 1 month of delay they will say 1% interest you should pay, or you should pay 5,000 late fees, or you should pay 5,000 penalty. So whatever the name they are saying, their point is what? Ray, you pay the consideration after this particular prescribed time, but you pay me that late fees or surcharge or whatever you call it. So here the point is, understand, majority of the cases nowadays, the suppliers, what they are doing, they are providing to their customers the facility to make the payment late. So here this is almost followed by majority of the suppliers as a part and parcel of their business. So they are agreeing to tolerate you making the late payment. So here it is nothing but again what? Agreeing to tolerate the late payment. Then it is obviously what? Supply. Why? Because there is an agreement where supplier is agreeing to tolerate you making the payment late even after the time limit, but he wants some consideration from you. So that is obviously a supply, hence it is taxable. But sir, what is the tax treatment for that, if you ask me that way? See, this particular transaction where he is paying you the consideration, the late fees for delay in payment of consideration, is accepted as supply. It is treated as supply, hence taxable. So it is taxable the same way how the principal supply is taxable. So please understand, this is naturally bundled in the ordinary course of business, my dear friends. Hence it is called as composite supply. If you remember section 8, composite supply and mixed supply. So what shall be the tax treatment? It shall be assessed at the same rate as the principal supply. So because this allowing you to pay the consideration late is nothing but part and parcel of their business, which is treated as naturally bundled in the ordinary course of business. As I was telling you already, majority of the suppliers around the globe are providing their customers with this option. So this is also what? Composite supply, and hence this amount whatever you are paying will be treated as per the principal supply. Whatever the provisions are applicable to the principal supply, same thing applicable to this particular amount also. So principal supply is exempt under GST na, this is also exempt under GST. Principal supply is charged to GST 12% na, this amount is also charged at 12% GST. Principal supply is supply of good na, this is also supply of goods. Am I clear? Shall we proceed? The same logic applies even here also regarding cancellation charges. there is one item called cancellation charges. I know I left one point here, fixed charges for power. I will come back to that. But understand this cancellation charges. Similar to that late payment surcharge or fees, whatever it is. Here also, that point was all about what? Suppliers giving their customers the time limit to pay the amount. That is, even though you are paying late, it is fine, but pay me some interest. So that is what that point all about. But here this is all about cancellation charges, where this practice you normally see in hotel industry, hotel accommodation, or tours and travels, or transportation. If you see, for example, I am booking an air ticket from, let us say, Chennai to Delhi, and they say without cancellation, let us assume the price is 10,000 ticket price. They say free cancellation or with cancellation, whatever it is, free cancellation or with cancellation, they will say it is rupees 11,400. That means they will allow you to cancel the ticket, whatever you are booking, the air ticket, but further they are charging extra consideration. Here, if you don't want cancellation, no problem, this is the price. That means, understand, here if you want cancellation option, you have to be charged extra, or at the time of, like, when you are cancelling the ticket or whatever it is, the booking in a hotel accommodation or whatever it is, they will deduct some amount and will allow you to cancel it, and they will refund you the balance amount, entire amount. So here if you see, as again a global practice, majority of the suppliers in this particular industry, because to improve their business or whatever it is, the majority of the suppliers in these industries like hotel accommodation, tours and travels, transportation mainly, so these cases what they are doing, they are providing their customers an option to cancel their bookings, providing an option to cancel their tickets after paying a small amount as cancellation charges, cancellation fees, or whatever you call it. Clear? So here they are very much happy, they are agreeing you people cancelling the booking. That means they are agreeing to tolerate you cancelling the booking, you cancelling the ticket. Further they want some consideration. So that is obviously what? Supply, and hence it is taxable. Sir, how it is taxable? What tax rate? What shall be the tax treatment? Same story. These things are naturally bundled in the ordinary course of business. So as I already told you, natural part of the bundle. So whatever the tax treatment is applicable to the principal supply, the same shall be applicable. So they have given here the example. If you see, sir, railway tickets, if you are booking, whatever the railway ticket GST rates are applicable, the same thing is applicable for cancellation charges also. Suppose if the class of travel, if you remember transportation through railways, first class and AC are taxable. So 5% GST, any other class is exempt. So first class or AC is taxable. So first, let us assume 5% is GST on them. Cancellation charges also will be what? Will be the same rate. Suppose, sir, I am traveling in a second sleeper class or any other classes, then the GST is exempt there. So then the cancellation charges also exempt under GST. No, sir, I am booking a ticket in first class or AC. So GST will be like on cancellation fees, same like first class and AC, that is 5%. No, sir, I am booking a sleeper class ticket and I am cancelling it. For that, railways are charging cancellation charges from me. Then that cancellation fee is also exempt. Why? Because the principal supply is traveling in sleeper class. Transporting you in sleeper class is exempt under GST. So the cancellation fees of that ticket is also exempt under GST. So hope this is clear. So both are connected points, this one and that late payment surcharge or fees. So I just discussed them together. Now going back to the next one, I mean the previous one, fixed charges for power. If you see fixed charges for power, here the problem or here the doubt was, normally if you see, the government will charge the electricity bill first minimum consumption, minimum fixed charges they will charge, and later on go for variable pay per unit. That means, let us say for example, if you are using for 100 units, they will say the bill is rupees 300. That means 0 to 100 units. You have a connection of electricity, then 0 to 100 units, whether you use 30 units or 70 units or 100 units, they will charge 300 fixed. And over and above 100 units, let us assume after 100 units of electricity consumption, let us assume they are saying that rupees 7 per unit. Just examples, guys, don't take it seriously whether it is 7 per unit or not, based upon which state you are located, all that. So let us assume after 100 units, that means up to first 100 units 300 rupees, later on after 100 units it is 7 rupees per unit. Now the doubt was, sir, if at all I am using only 60 units of power, still I am paying for 100 units, because it is a minimum charges which I have to pay. That means, am I paying consideration to the government for tolerating that me non-consuming the full 100 units? So please understand, this is not like that how it is going to work. It is they are supplying you electricity, they are charging consideration. Their fees, their consideration is fixed. Up to 100 rupees 300. That's all. Up to 100 units it is 300. Sorry. So up to 100 units you pay me 300 is the consideration and the agreement for providing you the electricity. There is no tolerating that you are not using even 100 units, all that stuff. Their price is up to 100 units, pay me 300. After that, you pay me 7 rupees per unit. That is their price. So it is supply. Here it is not like they are agreeing you people not using fully 100 units. They are tolerating that act. No, it is not like that. It is their pricing. So it is obviously what? Supply. But here the problem is it is exempt under GST. It is not taxable because it is exempt under GST. So if you see, whether it is minimum fixed charges or variable charges for sale of electricity, they are charging. So it is not taxable because supply of electricity is exempt under GST. So that is one doubt again clarified by the department as a part and parcel of this notification. We are discussing that. Now coming to the next one, the last one in this series of doubts related to same concept. Are we agreeing to tolerate something and collecting the consideration? And if you see, the last concept here is, normally you will be seeing people will be dealing with sale of immovable property, etc., etc., or the government is like going for an auction and allotting this natural resources, mines, etc., etc. See, whether in this case of biddings or in case of any agreement to sell immovable property, the general thing is, let us assume I am agreeing to sell a property worth 100 lakhs. First, initially what we will do, sir, initially we will pay 25% as advance. Let us assume 25% as advance, and within 90 days you should get the registration done. You should get the registration done. That means first I will pay you 25 lakhs and we'll make an agreement. And after making this payment of advance, what we will do, guys? We will make an agreement. So there is an agreement to sell that land. Now agreement to sell that land, where the condition will be within 90 days you should make the payment and we will go for registration. By any chance if you are failing to make that payment within 90 days, then the registration will not be taken up, and whatever the advance you have paid, that shall be forfeited. Now here the doubt is whether this forfeited advance is to be treated as consideration for tolerating me breaching that contract. You tell me. So why we are forfeiting this? Are we not forfeiting this to punish the opposite fellow for breaching the contract? Are we not forfeiting this to discourage the non-serious buyers? It is not like, see, I am not okay with this, I am not agreeing to tolerate this. Why? Because my agenda is primarily to sell the property. Government agenda is primarily to allot the natural resources or allot the mines and get consideration from that. It is not like, okay, you breach it in middle and I will be happy with the damages what you are paying or the forfeited amount whatever I got, I am happy with that. No, that is not the case here. Please understand. So here there is no agreement to tolerate an act. Okay, so whatever the consideration we are getting, again the same logic. Here we are trying to punish the opposite fellow, or I am trying to get myself compensated because of the injury I have suffered because of you breaching the contract. Clear? So, or we are trying to punish the non-serious buyers or non-serious bidders. So, for that we are charging this consideration. It is not for agreeing to tolerate the act. So, hence it is not a supply, hence it is not taxable. So, that is what all about with respect to this particular clarification. So, agreement to tolerate an act should be there. For that any consideration if you are receiving, then only it is a supply, otherwise it is not a supply. So remember the fundamental thing, 2 points: there should be an agreement to tolerate that. Second one, there should be consideration for this. And simple logic, understand, when we are collecting something from the other fellow for punishing him because he did something wrong, breached the contract, violated the law, etc., etc., or we are collecting that consideration from that another fellow. Why? Because to discourage non-serious people like this, non-serious people entering into employment contract, non-serious people entering into an agreement to buy any property, non-serious people participating in the auctions or biddings. So for these people I just want to punish them. So in such cases, please understand, it will not be treated as supply. Why? Because there is no agreement for us to tolerate their breach, and for that we are accepting consideration. No, if that is the case, we are agreeing to tolerate something, for that we are getting consideration na? Yes, it is a supply and it will be taxable. And we have seen mainly this late payment fees and cancellation charges, they will be treated at par with the principal supply. So those 2 points, please be very careful, can be tested as an adjustment in any problems. Am I clear, my dear friends? So the last point in this chapter, where there is again a clarification on no claim bonus. No claim bonus allowed by insurance company from the insurance premium payable by them. So here this is also almost connected to the previous discussion. So what it is actually, now please understand, normally insurance companies, what they will do, see, let us assume I am taking insurance on a car and I have paid insurance premium. Let us assume first year premium I have paid. First year premium I have paid rupees 50,000. And during this first year, if any accident happens to my vehicle, I can claim the amount, insurance amount, and so that I can get the repairs done for my car or vehicle. But what happened? Fortunately, first year nothing has happened, so I have not claimed anything from the insurance company. So what the insurance company will do, the second year when I am going to make the payment of the premium, so second year, let us assume the premium is 50,000, they will give me a discount of 10,000 rupees because I have not claimed anything. That means no claim bonus. Let us assume they are giving me 10,000 no claim bonus because I have not claimed any insurance in the previous year. Now the doubt is whether this no claim bonus, I am receiving from the insurance company, should it be treated as consideration received by me for agreeing to refrain from claiming the insurance amount. So it is like, see, I am agreeing, okay, I will not take any insurance claim, I will not claim the amount, so that you pay me no claim bonus tomorrow. Like that, is there any agreement? You tell me anybody will do that? For no claim bonus, will I stop claiming insurance from the insurance company? No, obviously no. There is no such agreement where I am agreeing with the insurance company, okay, yeah, tomorrow if any insurance amount is there, that amount I will not claim from you, you pay me consideration, no claim bonus. Like that, is there any agreement? No, there is no such agreement. So that is the reason, same story, this is not supply between insurance company and the customer. But here one interesting thing what we have to notice is, again in the same clarification the department has clarified with us, that this no claim bonus is given as discount by the insurance company from the insurance premium payable in the next year. Let us assume premium payable in the next year is 50,000 and the no claim bonus is 10,000. So that means they will ask us to pay only 40,000. So here one more interesting clarity given by them is that this no claim bonus is similar to discount given by insurance company to you. So please take that discount away from the value of supply, that is exclude that discount from the value of supply. And you know very well, discount given after the supply is made, that shall be excluded from value of supply, provided what, if it is already known at the time of agreement. Remaining conditions are obvious. It is like linked to the invoice and proportionate ITC to be reversed. Here obviously it is linked to an invoice. Proportionate ITC to be reversed concept will not arise here because recipient has not taken ITC. Are you able to understand? Still invoice itself is not raised, so ITC has not been availed by the recipient, so proportionate ITC to be reversed concept will not apply here. So simple logic, guys. Hope you remember that discount treatment given after the supply is made. After the supply is made, if the discount is given, three conditions are to be satisfied to exclude that discount from value of supply. One condition is it should be as per the it should be as per the terms of the agreement. Second thing, it should be linked to the invoice. Third thing, it should be like the recipient should be reversing the proportionate ITC. Here the second and third point are not coming into picture because however it is linked to the invoice, recipient has not taken ITC yet. But first one, the first condition is the discount should be known at the time of supply. Whether it is known to the customer or not at the time of supply, see, whenever you are entering into any insurance contract on these vehicles or etc., in the insurance contract itself they would have clearly mentioned you can have a benefit of no claim bonus, where in the subsequent premiums payable by you, you will get a discount of no claim bonus. Suppose in that previous year you have not claimed any insurance amount from the insurance company, so this no claim bonus you are very much aware at the time of entering into the contract. Hence it should be excluded from the value of supply, that is from the premium amount, and the balance amount only will be taxable. So here if you see, only on this 50,000 we have to charge GST. Sorry, 40,000 we have to charge GST. 50,000 is normal premium amount regularly. On that 50,000 we should charge GST generally, but here no claim bonus discount you are eligible, so 10,000 discount gone. So on the balance 40,000 value of taxable supply will be there, and you have to pay GST on that 40,000 only. Hope it is clear. So again I will just repeat what we have discussed here. No claim bonus. No claim bonus is not a consideration customer is getting from the insurance company for stopping himself from not claiming the insurance amount. It is not like that. So that is not a supply between the customer and the insurance company. But no claim bonus is given as a deduction in the premium amount in the value of supply, and balance portion only will be subjected to GST. These are the two things which we have seen under this particular issue. Am I clear? So this is what chapter number 2 amendments all about. And in this exemptions chapter, guys, some existing exemptions have been amended, some exemptions have been newly added, and some exemptions have been removed, and there are some issues and clarifications given by the department. So first let us see the amendments in existing exemptions. So this entry number 6 regarding this government services, we have already discussed on this, and the related new entry 24C also we have discussed, the postal department services. And now entry number 12, if you see, so entry number 12 is all about renting of this residential dwelling for use as a residence. This also already discussed along with entry 5A under RCM. If you this is all, if you see, this is already discussed under RCM. So this is also already done. Next, coming to another one related to transportation of passenger services. Guys, if you see, we have seen already entry number 15 where the transportation of passengers by air embarking from this northeastern states, that is Arunachal Pradesh, Assam, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim, Tripura, Bagdogra located as West Bengal. So transportation of passengers by air in the economy class. Earlier it was just transportation of passengers by air. Now they made it transportation of passengers by air in economy class. They have exempted. So they are more specific here. So economy class it is exempt. Business class it is taxable. And here the transportation of passengers should be from the airport which is located in these northeastern states, and also Bagdogra in West Bengal. Fine. So that is just the small addition to this. And if you remember, in this particular segment, in this entry, transportation of passengers by non-air conditioned contract carriage and non-air conditioned stage carriage, if you see, that was enjoying the exemption, and if it is AC it was taxable. And they have made some additions also here. Even if it is a non-AC contract carriage or non-AC stage carriage, still if it is supplying this transportation of passenger services through e-commerce operators covered under section 9 section 5, now that becomes taxable. So that means, see here, I am just trying to explain you this concept with the help of this flowchart. Transportation of passengers, if you see, transporting through contract carriage, stage carriage. Contract carriage, if it is for non-AC with a non-AC contract carriage, sir, if it is for conducted tour, charter or hire or a tourism purpose, then it is taxable. In any other cases, if you are supplying it, generally it should have been exempted. Now there is a small addition there. If you are supplying for any other purpose but through e-commerce operator under section 9 subsection 5, then also it is taxable. Others exempt. Here we have to see non-AC bus booked for wedding, that is a non-AC contract carriage, not booked through this 9 subsection 5 e-commerce operator, so it is enjoying the exemption. Remaining cases it is taxable. And obviously understand, radio taxi is always taxable no matter whether it is AC or non-AC, whether through 9 subsection 5 or not. And if you see stage carriage, contract carriage with AC, always taxable. Stage carriage, again coming to that, non-AC, sir, it is generally exempt, but now there is additional point, non-AC also through 9 subsection 5 e-commerce operator it is taxable, other cases it is exempt. So if you see Chennai to Hyderabad non-AC bus, Orange Travels or any other government transport undertakings, if you are transporting the passengers, it is exempt. But if the same thing is done through e-commerce operator under section 9 subsection 5, it is taxable. So that is what the point. So this flowchart will give you a better clarity. So you can copy it by pausing the video. Right. So let us go on to the next one. Here the next entry 20, if you remember, transportation of goods. So transportation of goods, the exemption was given based on the materials what you are transporting, whatever the items you are transporting. In that they have removed one relief, that is railway equipment and materials. So now what happens if you are transporting these materials now? So now it becomes taxable, guys. Railway equipments and materials, if they are transported through rail or vessel, they are earlier they were exempt, now it is taxable. The same way here in entry number 21, if you see, earlier for the goods transport agency, see, transportation of goods by road through GTA is taxable, but there was a relief based on consideration, based on if it is single carriage consideration not exceeding 1500, they were enjoying the exemption, and uh, single consignee consideration not exceeding 750, they were enjoying the exemption. Now it is taxable. So services by transportation of goods by road by GTA, it is taxable irrespective of the consideration. So in exam, if they are asking you like transportation of goods by road, consideration charge 600, 700, or single goods carriage 1200, 1300, like that, they may confuse you, but it is taxable irrespective of the consideration. There is no more relief with respect to consideration. So that is removed. Next, there was an entry number 24B, where they were giving exemption for storage and warehousing of goods like cereals, pulses, fruits, nuts and vegetables, spices, copra, all this stuff. But now the exemption has been removed to nuts, spices, copra, sugarcane, jaggery, raw vegetable, fiber such as cotton, flax, jute, all that stuff. So remember, now storage and warehousing of only cereals, pulses, fruits and vegetables. Sorry guys, it was here we have by mistake we have just striked it off. So the exemption is available to whom? So storage and warehouse of cereals, pulses, fruits and vegetables, it is exempt. So vegetables also it is exempt, storage or warehousing. Remaining things it is taxable. So remember, storage, warehousing of only 4 items are exempt now, that is cereals, pulses, fruits and vegetables, right? So that is the amendment in the existing entry 24B. Now coming to entry 54, which is related to agricultural services. If you see here, again the small change is they have removed this point H, where they are saying that services by way of fumigation in a warehouse, related to agricultural produce was earlier exempt, now it is taxable. But the interesting thing is, the same thing if it is done at the agricultural farm, then it is exempt. That means, to put it simple, sir, fumigation process if you are carrying out in the agricultural farmland, it is exempt. Any other place if you are carrying out this fumigation process, then it is taxable. So the next amendment, if you see in entry number 74, related to health services, you know, like healthcare services were exempt if they are provided by clinical establishment, authorized medical practitioner or paramedics, all that. In that they have added a small point regarding taxing the room charges collected by these clinical establishments. So if you see, clinical establishments are charging room charges, and we are exempting the room charges if at all it is for an intensive care unit or a critical care unit or intensive cardiac care unit or neonatal intensive care unit, irrespective of the consideration, irrespective of the amount, how much ever they are charging, it doesn't matter. So it is exempt under GST. But any other rooms, like after the surgery is over, the patient will be shifted to a normal room, so there, for such type of rooms, so other than this ICU, CCU or all that stuff what we have seen, other than that, any other room charges if these clinical establishments are charging from the patients, where per day if it is exceeding 5000 rupees, then it is taxable. Other cases they still enjoy the exemption. So just the government is trying to get GST collecting the tax from, let us say, some rich people who are paying more than 5000 per day as room charges. But no matter whatever is the consideration for these cases, it is exempt under GST. Next, coming to the next entry, entry number 80, my dear friends, the another amended entry, the last entry which got amended. So in this, if you see services by way of training or coaching provided. If you see, normally in this entry, the services by training or coaching with respect to recreational activities and with respect to sports, and recreational activity should be related to what? Arts and culture. And here the amendment is, earlier there was no mention about who should be the supplier, but now they have clearly mentioned the supplier should be an individual, then only the exemption will be available. So here, if the services by way of giving training or coaching in recreational activities like dance, music, painting, sculpture making, literary activities, theater, etc., this can be with respect to any school or tradition or language. If these things are provided, let us assume you are running a dance school, and who is running this dance school? This should be by a individual, then only the exemption is available. Otherwise, if it is done by any other person like HUF or a partnership firm or as a LLP or a company, then the exemption is not available strictly. So to put it short, sir, if you are providing training or coaching in recreational activities related to any arts or culture, it can be in any stream, I mean any school, any language, any tradition, and if it is provided by individual, then only the exemption is available, otherwise not available. This is the addition done. Supplier they are mentioning in this entry. Earlier there was no mentioning about that, who is the supplier. And coming to the next one, obviously it remains the same. Training or coaching with respect to sports, it should be provided by whom? Section 12AA entity, that is the charitable entity which is registered under section 12AA of income tax. We call in short section 12AA entity. So that remains the same, that still enjoys the exemption. So these are the set of exemptions which are amended. And now let us move on to, so guys, the next exemption is, next segment, if you see the new exemptions which are inserted. Now coming to this point, so coming to this, earlier there was already an exemption where the tour operator providing exclusively the services of conducting a tour wholly outside India to a foreign tourist is exempt under GST. Now the question was regarding, sir, what if the services were provided to the foreign tourist partly for the tour conducted in India and partly outside India? There might be some package where a foreign tourist is coming to India and meeting a tour operator here, where the tour operator is providing India, Sri Lanka and Nepal together as a package. Like this, any packages might be provided by the tour operator. So the exemption here brought in newly is entry number 52A, where they say services provided by the tour operator to a foreign tourist, to the extent the tour conducted outside India, should be exempt reasonably. So how you calculate this exemption means, they are saying you will calculate this exemption based on total consideration which is charged for the tour. It is in relation to the tour outside India proportionately. So we will take total number of days, and proportionately to the days outside India you will calculate the exemption, and you will compare it with 50% of the total consideration charged for the entire tour. So whichever is less, that much amount only exempted. So how much is exempted, my dear friends? Sir, total consideration charged to the extent of tour conducted outside India. That means total consideration divided by total number of days inside and outside India, and it will be multiplied by with the number of days of the tour outside India. So proportionately whatever is related to tour conducted outside India, the consideration that we want to give exemption. But in the same time, the government does not want to give exemption more than 50% of the total consideration. So they say calculate the amount proportionately outside India, or 50% of the total consideration, whichever is less. That means maximum exemption will be given how much? 50% of the total consideration. More than that we are not going to give to you. And here one interesting thing is, while calculating this number of days, if you have stayed outside India, if you have stayed outside India or inside India, anywhere, in any place, either inside India or outside India, in a day, if your duration of stay is at least 12 hours, that means greater than or equal to 12 hours, then it will be treated as one full day, it will be counted as one full day. No sir, it is not greater than or equal to 12 hours, it is less than 12 hours, then it will be treated as half day. So while counting the number of days, if you have stayed in India or outside India for greater than or equal to 12 hours, then we will count it as one full day. If you have stayed for less than 12 hours, we'll count it as half a day. So that is what the point. So let us see an example here. So if you see the example here, Mr. Sanchar, a tour operator, provides his services to Mr. Paradesi, a foreign tourist. And there are three cases, my dear friends. Simple one. So the tour operator is providing the services to a foreign tourist where he is staying 3 days in India, 2 days in Thailand. Total consideration is 2 lakhs. So how do we calculate here? So total consideration 2 lakh into number of days stayed outside India, that is 2 days here clearly given, divided by total number of days of the whole tour. So it is 5 days. So it is nothing but 80,000. You compare it with what? 50% of the total consideration. 50% of total consideration 2 lakh is 1 lakh. So 80,000 or 1 lakh, whichever is less. So exemption is given to 80,000 because 80,000 or 1 lakh, whichever is less. Remaining amount taxable 1,20,000. Same way here, if you see 2 days 10 hours, the foreign tourist is staying in India. 3 days in Thailand. If you see 2 days and 10 hours, this 10 hours is less than 12 hours. So we will treat it as half day. So that means 2 days in India plus half a day, that means 2.5 days, and 3 days in Thailand. So total number of days of the tour is 5.5 days. So for 5.5 days, if you are charging 2 lakhs, outside India is only 3 days. For 3 days, what is the proportionate amount? It is 2 lakh into 3 divided by 5.5. So you get 1,09,091 rupees. You compare it with 1 lakh, whichever is less, that you will get as exemption. So 1 lakh is exempt and balance 1 lakh is taxable. Same way, if you see 1 day 14 hours in India, that means can I take it as it is greater than 12 hours, my dear friends. Yes or no? Greater than or equal to 12 hours. So it should be treated as one full day. So that means in India totally 2 days, and 2 days and 18 hours in Thailand. Here also greater than or equal to 12 hours. That means this should also be treated as one full day. That means 3 days in Thailand. Total how many days? 5 days. Consideration 2 lakh. And out of this 2 lakh, outside India is 3 days. Total days is 5 days. So proportionate to outside India is 1,20,000. You compare this 1,20,000 with half of the total consideration, that is 1 lakh. So 1,20,000 or 1 lakh, whichever is less. 1 lakh is less. So this is again exempt. Balance 1 lakh is taxable. Hope the example is clear. Very small example. So this is the concept, right? So with this we are done with entry 52A. Next, let us move on to the next one. Entry 61A, old entry itself, like services by way of granting national permit to a goods carriage. Guys, you will be seeing on behind the lorries, no, they would have been written national permit, national permit. So further they are paying consideration to the respective authorities, that is exempt under GST. So these are the amendments which are newly inserted, and this 61A was inserted long back, but it is given in the statutory update, hence we are discussing. So let us see what are the exemptions which are withdrawn. See here, why I am discussing the exemptions which are withdrawn now, because there are chances that in the exam they can give you this adjustment, and you with the old knowledge might feel like this is exempt, and you can write the answer that exempt in your exam. So if you just go through quickly once of these withdrawn entries, so you'll have a better clarity. Okay, these are exempt now, these are taxable now, the exemption has been withdrawn. So like that, even in exam, if there is any adjustment, you will be little bit comfortable. So coming to the services which are exempt, guys, there are certain services which I have given here in the material, but some exemptions we missed out, so I have written here which are withdrawn and now they are taxable. So let us see them quickly, just like that we'll finish it off. So now First one, entry number 14, the exemption is withdrawn, which was giving exemption to the room charges collected by the hotels, lodges or guest house or campsite or in whatever you call, where the consideration was not exceeding 1000 rupees, then the room charges collected by them were exempt under GST. But later on they have removed that exemption, now it is taxable. Same way, services by way of access to road or a bridge on payment of annuity, that was earlier exempt, now it is taxable. We are not talking about toll charges, my dear friends. Toll charges are still enjoying the exemption, but the access to road or bridge was also given by way of paying the annuity, that was exempt earlier, now it is taxable. Toll charges still enjoy the exemption. Based on this particular entry 23A, people were having a doubt regarding, see, for construction of the roads, the clarification is already here. Yes, so during the construction of roads, normally the consideration was paid upfront. Some consideration was paid before starting the construction itself, like upfront payment was made and the remaining payment was made annually in the form of annuity. So deferred payments were made. So there was a doubt, sir, for construction of the roads where some portion of consideration is received upfront while remaining is made through deferred payments of annuity, which is spread across the years, whether this was exempt. Like that they got a doubt. Actually that was not exempt. That consideration was paid for them for constructing the roads, not for having access to the roads. So they have clarified, no, that is taxable. But now this clarification remains redundant. Why? Because that services by way of access to roads or bridges by way of payment of annuity itself is now withdrawn, so that becomes taxable. So the doubt which came to the people based on that entry 23A, that itself is now not there, so this clarification also need not be there. Am I clear? So this clarification does not have any role now. So please understand, services by way of access to roads or bridges by paying annuity is very much taxable, but by paying toll charges normally whenever you are using them immediately then and there, that is exempt. So hope it is clear. Now coming back, services by Reserve Bank of India was earlier exempt, now it is taxable. Services provided by IRDI, Insurance Regulatory and Development Authority of India, was earlier exempt, now taxable. Same way, services provided by SEBI to its investors, services provided by this Indian Railways Finance Corporation to Indian Railways by way of leasing of assets, earlier was enjoying the exemption, now it is taxable. Same way, if you see, services provided by this FSSAI, like granting the license, registration and analysis or testing of food samples, all that, for which they take consideration, that was exempt earlier, now it is taxable. So the next one, if you see what is the exemption withdrawn, that is services provided by GSTIN, that is also withdrawn, now it is taxable. Slaughtering of animals was earlier exempt, now it is taxable. Preservation of stem cells by cord blood banks was earlier exempt, now taxable. And same way, common medical waste treatment provided to clinical establishments by this waste treatment plants, they are earlier exempt, now it is taxable. So that is what with respect to exemptions withdrawn. So now let us go with certain clarifications given by the department. In that, see, I have given in such a way like what is the issue and what is the clarification. First, if you see what is the first issue here, what we are taking up in clarifications is, normally this midday meal scheme, you know, we have seen education institutions entry 66 where the exemption is given to catering services provided to education institutions are exempt under GST. Now the doubt here was see, first of all, whether Anganwadis, where in certain states government has this Anganwadi scheme where they will be like providing informal education to the children, like preschool kind of thing. And in these Anganwadis, this midday meal scheme programs are implemented, but that programs are funded by non-government entities, maybe corporates or anybody else. So now the doubt is whether that is exempt or not under GST. First of all, the clarification says this Anganwadi is also very much providing preschool education and very much fitting within the meaning of educational institution. And midday meal scheme programs provided to them, they are obviously educational institutions. Whether they are funded by government or non-government entity, it does not matter. Midday meal scheme programs are the catering services provided to Anganwadis. Anganwadis are educational institutions, and hence they are enjoying the exemptions. They can enjoy the exemption. So that is what the clarity given. So serving of food to Anganwadis shall be covered under the said exemption, even though it is sponsored by government or even though by donation from some corporates, it doesn't matter. The next issue I already discussed with you during this, access to roads by payment of annuity. Next, coming to the next one, the another interesting thing. So the next one is, my dear friends, normally same thing related to educational institutions services. Now you know that normally the central government and state governments boards of education will be having certain boards like National Board of Examination, etc., etc., where these boards will take care of conducting the examinations. Now these boards are not coming under the definition of education institution. If you remember, education institution definition says whoever is providing the education as a preschool and up to higher secondary school or equivalent, or anybody providing education as a part of their curriculum to obtain a qualification recognized by law, or education as a part of approved vocational education course. These three cases, any of these three cases, if you are falling in, then you are called as an education institution. But this National Board of Examination will not come under any of these three cases in the definition. So it is not qualifying the definition of education institution. But these boards are conducting the examinations, so their services to the students should enjoy the exemption. So with that idea, the department has given a clarification for the limited purpose of conducting the examinations. For the limited purpose of conducting the examination for admission into any educational institutions, these boards are conducting the exams. So we will treat this type of boards as educational institution only for the purpose of conducting the exams. So the doubt regarding these boards conducting the exams, and for conducting the exams they will collect some consideration, so this is their output service. Sir, for conducting the exams they are taking some consideration, exam application fees, etc., etc., from the students. And also for conducting the exam they are taking some input services for conducting the exam, like hall ticket printing or results announcement or notification released in media, all these things. For these input services also they are paying some consideration. So these things are taxable or exempt. And sir, these type of boards are also what? Providing some accreditation to educational institutions and professionals. These type of things are taxable or exempt was the doubt. So first doubt was regarding conducting the entrance examination and collecting the consideration from the students. Second thing is, for conducting such entrance examinations they are also availing some input services like printing the hall tickets, releasing the notification in the websites or the media, etc., all that stuff. So for that services, whether they are taxable or exempt. Next, accreditation given to educational institutions or professionals, whether these are taxable or not. And as I already told you, sir, the clarification says these central or state educational boards will be treated as educational institution for the limited purpose of providing services by way of conduct of examinations to students. So National Board of Examination is an educational institution, and hence the services provided by them for conducting the entrance examination is obviously exempt under GST. So GST shall not apply to any fees or amount charged by such boards from the students. So here we are done with first query. Then the second query is, obviously if this National Board of Examination is treated as educational for the limited purpose of this conducting examinations, if you see any services taken by an educational institution in relation to conduct of an entrance examination, then it is exempt. Any services availed in relation for conducting examination is also exempt. So this National Board of Education National Board of Examination is also an educational institution. Sir, they are taking the services like online testing or result publication, printing of notification for examination, admit cards and question papers, all that stuff. These type of things are their inward supplies. These are their input services. They are input services. But these are input services for what? Input services for admission to or conduct of an examination. So obviously these are also enjoying exemption. So these are also enjoying the exemption. So these are exempt. Am I clear? So any services which are availed, input services in relation to admission or conduct of examination is also exempt. So this National Board of Examination will also enjoy exemption for the services availed by it. Example, we have seen online testing, result publication, printing of exam notification, admit cards and question papers. Right. Now, one last query left in this point or clarification is, sir, these type of boards, what they will do, they will also provide accreditation to any institutions or professionals and charge some fees. Now see, for example, somebody doing some like let us assume medicine abroad and coming back to India, and when they are coming back to India, they are supposed to write this FMGE screening test so that the government will allow them to practice medicine in India. For that we are collecting fees from them. These things are not enjoying any exemption. They are obviously taxable. They are not coming under any services exemption which is given under entry 66. So they enjoy the tax, not exemption. Okay. So that is what with respect to third point. So is that clear, my dear friends? These type of boards, what they are doing, they are providing accreditation to the educational institutions or also to the professionals by charging some fees. So this is just like giving some recognition to them or giving some license to them or permission to them to operate or to practice, etc., etc. That is not covered under exemption entry number 66. It is very much taxable. So these are taxable. Right. So, and one more thing, if you see, after that clarification has been issued, the government has inserted a new clause also, clause 4A, you can say, under this entry number 66, where they said any authority, any board or body which is set up by central government or state government, including a national testing agency, sir, for what purpose? For conducting the exams, for conducting the entrance exam for admission to any educational institutions, they will be treated as educational institution. Okay. So same the clarification, they are giving the legality to that by adding some clause in the entry 66. So they are trying to say the same thing, that is any body which is set up by government for conducting entrance exams, then for the limited purpose of conducting the entrance exams, they will be treated as educational institutions, even though they are not satisfying the educational institution definition as such. Hope it is clear. So let us go with the next issue and the clarification. So the next issue is again a very simple one. See, normally there are free coaching services provided by coaching institutions and NGOs under a scheme called Scholarship for Students with Disabilities. So under this scheme, they are providing some free coaching services. What about the taxability of these things? See, understand, if you remember, there is entry number 72, which says any training or similar type of thing, coaching services provided by any coaching institution, skill development, etc., etc., where the total expenditure is borne by the government. If you see that entry says, so 75% or more of the total expenditure for any such training programs are incurred by or borne by this central government or state government, then they are exempt under GST. Here in these cases where you are providing the training programs to like the people, students, under this scheme called scholarship for students with disabilities, where the total expenditure itself is borne by the government, then obviously it is exempt under GST. So if you remember, entry 72 says 75% or more of the total expenditure if it is borne by government, any training program, then it is exempt. Here total expenditure itself is the government is bearing, so obviously it is exempt. So that is the next issue on the clarification. Now going to the next issue, what it is all about. Friends, if you see, when you are transporting the goods by road, some overloading charges for the vehicles with overload will be charged by the government. Sir, what about GST on that? And next are the toll plazas and all, they'll charge all this stuff. And next, if you remember, if you see normally in toll gate, when you're crossing the toll plaza, if the vehicle is not containing this fastag, if the vehicle is moving without fastag, they will charge double the amount than the normal vehicle with fastag. So if a vehicle is going with fastag, 30 rupees they are charging. A vehicle without fastag, they will charge 60 rupees. Whether that additional amount charged because I am not carrying the toll fastag, what about the taxability of that? Then the government has clearly clarified, see, these overloading charges or the extra charges collected because of there is no fastag, both are similar like toll charges only, they will enjoy the exemption, there is no GST on that. So it is clarified that overloading charges and the extra charges for vehicles without fastag, both are treated as toll charges itself and will enjoy the exemption. That is what the next issue on the clarification. The next issue is, guys, what about the state government giving guarantee to the PSUs for the loans taken by them? Earlier already there is an entry 34A, my dear friends, and that entry 34A says the same thing, that services supplied by central government or state government or union territory or anybody like to their undertakings or public sector undertakings by way of guaranteeing the loans. That means the central government or state government or local union territory, sorry, are providing guarantees for the loans taken by these undertakings, PSUs, with the banking companies and financial institutions. That services are exempt under GST. Okay, so that is already the existing entry 34A is also saying the same thing, and that is again reiterated by the government. Okay, next, what is the next issue? If you see the next issue, my dear friends, it is all about entry number 22. I repeat, you need not remember entry numbers. Okay, now entry number 22. If you see entry number 22, it says normally any vehicles given on hire to whom? To state transport undertaking or to local authority. Sir, what vehicles? Sir, to state transport undertaking, if you give a motor vehicle on hire which can carry more than 12 passengers, or to a local authority an electronically operated vehicle which can carry more than 12 passengers, it is exempt. Here the doubt is, sir, you have used the word giving on hire. Does it mean even renting? Then the government has clarified, yes, it is like giving on hire means even renting. So giving on hire includes renting of vehicles. So there is a very small clarification, right? So that is what the point. So giving on hire means it is like even renting of vehicles. That is why you should not study too much of English, otherwise you will get doubt of like, is hiring and renting or same or not. So if you are not studying English too much, then you will feel like, okay, both are same. Okay, right? So that is what the point. So giving on hire means even renting the vehicles, and hence it is exempt under GST. Am I clear, my dear friends? Let us move on to the next issue and the clarification quickly. So what is the next issue? So the next issue, if you see, again related to educational services. See, normally the educational institutions will be giving eligibility certificate to the students for going and writing any other entrance exam for any other educational institutions for pursuing the higher degree or higher qualification, whatever it is. So they will give eligibility certificate for their students for getting that admission. And also, suppose if the students are leaving the institution and joining other institution in middle or after their studies are over, they'll give something called migration certificate to the students. Now the doubt is, the educational institutions are charging some consideration for issuing this eligibility certificate and migration certificates, whether they are exempt under GST or they are taxable. Guys, if you remember entry 66 related to educational institution, any service provided by educational institution to the students is exempt. So the same way here also, the eligibility certificate or migration certificate issued by educational institution is nothing but the services provided to its students. So obviously they are exempt under GST. So they are exempt. So fine. Next, let us move on to the next entry. So the next one, if you see, the next issue is regarding to the mining lease operators. Normally the mines, you know how they will operate. See, they will be extracting the minerals, etc., etc., and some transportation of goods within that mines will be happening. So whatever the minerals extracted from one place in the mine, they will be transported to another place, all that stuff. Now what is the doubt here is, within that mines, to operate the vehicles or to use the vehicles along with the drivers, we are giving on hire. Let us assume Mr. Vishnu is giving vehicles along with drivers on hire to these mining lease operators, where these vehicles along with the drivers are at the disposal of these mining lease operators as per their will and wish, and the cost of fuel is also incurred by these people only. Now the doubt was, sir, can't we treat it like a transportation of goods by road except GTA? I am not a GTA. Can we claim exemption here? Was the doubt. Arey yaar, here you understand, I am not giving to that mining lease operator the services of transporting the goods from one location to another location. I am giving him the vehicles and the drivers at his disposal. Whenever he want, however he want, wherever he want, he can use them. Now here I am renting the vehicles. I am not transporting the goods. Using that vehicles and drivers, these mining lease operators are transporting the goods within the mine as per their will and wish. So this cannot be treated as transportation of goods services, my dear friends. This is renting of vehicle services. Okay, so here renting of vehicles to a mining lease operator is nowhere given under exemptions, so it is very much taxable. So that is what the entry, if you see. So they have clearly mentioned, usually in such cases the tippers, dumpers or loaders or trucks given on hire to the mining lease operator. And here you should see, here it is clarified that such renting of trucks, other freight vehicles with the driver for a period of time is a service of renting of transportation of vehicles. It is a service of what? Renting of transportation of vehicles. It is not service of transportation of goods, so hence it is taxable. Hope it is clear for you. So that is what the issue there. Okay, the another issue, a small issue, whether GST is applicable on honorarium paid to the guest anchors. Where it is exempt under GST, I really don't know. So they are talking about, sir, the TV channels will invite guest anchors to participate in the shows and pay them the remuneration. Yes or no, will be seeing some various talent shows, the singing shows or dancing shows, where in the singing shows and dancing shows, all that kind of stuff, whatever it is, TV channels, the guest anchors or the judges even, so whoever are participating, they will be like, even nothing is happening there, they will be clapping, right? So further they will get the honorarium. So that is taxable or exempt under GST was the concept. So there is no exemption given for such services anywhere in GST, so they are very much taxable. And of course, if there aggregate turnover is not exceeding the threshold limit, they need not go for GST registration. If they are not even going for registration, they are not a taxable person, then no GST liability. But otherwise, obviously, yes, they are providing services, hence GST is coming into picture. Okay, fine. Let us go with the next clarification without wasting time. So what is the next issue, my dear friends? The next issue is regarding, sir, whether GST is applicable on assisted reproductive technology, that is ART, such as in vitro fertilization. So normally, see, understand, this is like what artificial way of treating this reproductive related diseases, etc., where they are using a technology called IVF, in vitro fertilization. Understand, if you see this healthcare services definition, if you remember, we have clearly mentioned there, it is services by way of diagnosis, treatment or care for what? For the illness or injury or deformity or abnormality or pregnancy. And this IVF treatments are related to the pregnancy only, right? Where they are doing the diagnosis or treatment or care, they are doing the treatment related to pregnancy, and that is obviously recognized system of medicine, and there is no point of opposing exemption for this under GST. It is very much a healthcare service and hence exempt under GST. Am I clear, my dear friends? So this is covered under definition of healthcare service, hence it is exempt under GST. Clear? Why? Because healthcare service definition clearly says diagnosis, treatment or care for pregnancy is also covered under the definition. Okay. Now another super duper clarification. See, certain clarifications we don't understand. Who has got these type of crazy doubts? The doubt is, sir, we are selling the land. See, normally we'll be seeing people will be like purchasing some acres of land and will be selling it by laying plots. And before doing that, what they will do, they will just make sure the land is very attractive to be sold. So they will level the land completely, they will lay some drainages, etc., etc., all that, and create some ambience or vibe. Yes, this is developed land kind of thing, and they will be selling it. Now the doubt is whether the GST is applicable on sale of land after leveling, laying down drainage lines, etc., etc. Here, please understand, even after leveling it or laying down the drainage lines or putting up the electricity poles, all that stuff, still that land is a land which is immobile, neither sale of supply of good nor supply of services. After doing all these things, land does not become moon, or land does not become a ball to make it movable and treated as good. So that is still a sale of land only. It is neither supply of good nor supply of service. Okay, so that is what the point. Some great people have asked doubt on this also. Okay, fine, and still the department clarified with so much of patience. So it is clarified that sale of such developed land is also sale of land covered by para 4 of schedule 3, does not attract GST. Fine. So let us move on to the next issue. So the next issue on the clarification is regarding, see, the companies will be taking this non-AC contract carriage on hire and using them for transporting their employees. Whether that can be fitting within the exemption of entry 15B, where transportation of passengers through non-AC contract carriage is exempt. Now the point here we have to understand is, see, non-AC contract carriage you are taking, whether here it is already a predetermined route and predetermined time. See, for example, from morning 8:30 to 9:30, it is already a predetermined time from Gandhi Road to the World Trade Center. So you are transporting the employees. That is what the contract. Then it is nothing but you are taking transportation of passenger services from that fellow. If it is non-AC contract carriage, it is exempt. But when the vehicles are at your disposal, when the non-AC contract carriages are taken on rent for a period of time where it is at the disposal of the recipient based on the usage and time, all that stuff, then it cannot be treated as transportation of passengers, and hence it is not exempt. So simple logic, my dear friends. If it is a non-AC contract carriage and it is like transporting the passengers, transporting your employees on predetermined routes on predetermined time, then it is exempt. Why? Because it is nothing but transportation of passengers. In other cases where you are taking the non-AC contract carriage for a particular period of time where they are available for your use as per your will and wish, again the same story like mining lease operators what we have seen just now, that is not transportation of passengers, that is taxable. Okay, the next one, another small clarification is regarding, see, there is again related to transportation of passengers from or between places within India. If you remember, transportation of passengers in a vessel between places located in India is exempt. Here the doubt is whether these services provided by private ferries is also exempt. Why? Because here they say transportation of passengers by public transport. The entry says transportation of passengers by public transport other than predominantly for tourism purpose in a vessel between places located in India. Now the doubt is whether private ferries doing this thing is taxable or exempt. The doubt is because they have used the word public transport in the exemption. See here, public transport means the vessels should be used for public. It doesn't mean that it should be carried out by government. So the expression public transport is only means that transport should be open to public. It doesn't mean that it should be operated by government. So it can be privately owned or public owned, whatever it is, it doesn't matter. So it is meant for public, so anybody can use the services. That way it should be there. It does not have any difference between like whether it is operated by private people or government, it does not matter. So even the private ferries which are used for transporting the passengers in a vessel, or ferries, sorry, from one place to another place within India, obviously through waterways, that is exempt. Only condition is regarding tourism purpose. If you are using it for a tourism purpose, then only the taxability will come into picture. So that is another issue. Next, very small issue, the last issue in exemptions chapter, whether GST is payable on accommodation services provided by Air Force mess to their staff. See, normally if you remember, entry number 6 is talking about services provided by government. If you see, entry 6 says services provided by government to any person other than a business entity, other than postal department services, services in relation to aircraft or a vessel, or transportation of passengers or goods, and next to business entities. So 6 ABCD we have also discussed in this lecture itself. So these services are exempt. Services provided by government to any person other than business entity is exempt. Here also, services provided by army mess or navy mess or paramilitary and police forces mess to their personals or any other person other than a business entity is obviously covered under entry 6 and it is exempt. Guys, understand, simple. These people are government and they are providing services to their staff. They are not coming under business entity definition. So government services to any person other than business entity is exempt other than 6 ABC. So these are obviously exempt. Fine. So with this we are done with exemptions chapter, covering the latest amendments regarding new exemptions, old exemptions amended, existing amendments, existing exemptions withdrawn, and some clarifications. Right. So let us move on to the next chapter, chapter number 6. Chapter number 5, there are no amendments. Chapter number 6, input tax credit. So let us move on to the amendments which are present in chapter number 6, input tax credit. So the next chapter with respect to amendments is the most important chapter, input tax credit. And in this, if you see the amendments, first, regarding conditions for availing ITC, section 16 subsection 2, in that 16 subsection 2 clause AA is saying to avail ITC, your supplier should have filed his GSTR 1 or IFF, and they should have been reflected in your GSTR 2B, then only you can avail ITC. This one is like not a very latest amendment, obviously you all know that. So to avail ITC, the amount of ITC that your inward supply should be reflected in your GSTR 2B. When they will reflect in your GSTR 2B? When your supplier has filed this GSTR 1 or IFF, then only it will be reflected in your GSTR 2B. So hope you are aware of it. So let us proceed. Next, 16 2BA. This is one more small point. Sir, whatever is available in your 2B that you cannot avail ITC, the same time it should not be restricted. That means government can restrict whatever is there in your 2B. If it is not restricted that way, then you can avail happily ITC. Fine. So next, if you remember, there is a proviso below section 16 subsection 2 saying that the supplier has to make payment to the recipient. Sorry, the recipient has to make the payment to the supplier, the value and GST within 180 days from the date of invoice. If he has not done so, he has to reverse the ITC along with interest applicable under section 50 in the immediately upcoming GSTR 3B after the expiry of, while furnishing the return in form GSTR 3B for the tax period immediately following the period of 180 days. So in the next GSTR 3B, whatever he is filing immediately after the expiry of 180 days, recipient is supposed to pay value plus GST to the supplier within 180 days from the date of invoice. If he has not paid, he has to reverse the ITC along with interest under section 50. Now for your May 23 exams, there was an amendment in this where they have given amendment saying that whatever the 3B you are filing after the expiry of 180 days, in that immediately in that 3B you can just reverse the ITC amount and pay along with the interest. They forgot to speak about what if the proportionate payment has been done in the previous amendment. So now they have rectified that law drafting error where they are saying if you have made the proportionate payment, only proportionate ITC you can take, balance amount only if you are reversing sufficient. So that is a small correction done here. So the only correction here is earlier it was not given, wholly or partly word was not there. Now they have added that. So I'll just take you through an example and explain it simple. See, normally let us assume the supplier has supplied goods on 2nd June 2022 to the recipient where the value is 1 lakh, GST is 18,000. So now what will the supplier do? Immediately for the June month liability, supplier will discharge that GST liability of 18,000. The recipient will get that in his GSTR 2B and he will take as ITC. But sir, this is a credit sale, recipient has not yet made the payment. So the law says, the proviso below that section 16 subsection 2 says value and GST 1 lakh and 18,000 totally to be paid to the supplier within 180 days from the date of invoice. But sir, what if I don't pay that? Please reverse the ITC you have taken, Mr. Recipient. Whatever the ITC you have taken, that is 18,000, please reverse it along with the interest under section 50. That is from the date of utilization of that ITC till the date of payment, the same story. So you please make that payment. Sir, what if I have made a part payment and part payment is pending? So imagine out of 1,18,000 you have paid only 60,000. Totally you should have paid 1,18,000, but you have paid only 60,000. In such case, what will happen? The law says proportionate ITC you reverse. That means total payable is 1,18,000. How much you have paid? Only 60,000. Balance payable is 58,000, but this is including GST, value plus GST. So how much reversal we should do? 58,000 into 18 divided by 118. So 8,847 only you have to reverse. Hope you have understood. Value plus GST. So 1,18,000 you have to pay. But how much you have paid? You have paid only 60,000. So total unpaid amount is 58,000. And in that 58,000 you have value plus GST also. So GST only proportionately you should reverse. So 58,000 into 18 divided by 118 we are seeing. Am I clear? So that is 8,847 rupees you have to reverse. Sir, I have not paid fully now. You reverse fully 18,000 along with interest. Sir, what if I pay after 180 days? Can I re-avail that ITC? Happily you can re-avail that ITC. Section 16 subsection 4 time limit for availing ITC is not applicable here. Why? Because time limit for availing ITC is given in section 16 subsection 4. Here you are not availing ITC, here you are re-availing ITC. It is like for first time getting married only age will matter. For the next subsequent marriages, age is not going to matter. Age is just a number. The same way, for first time availing ITC, section 16 subsection 4, time limit is applicable. For re-availing ITC, this section 16 subsection 4 time limit is not applicable. Am I clear? So that is what the concept. So let us move on to the next one, new rule 37A. So what it is all about? So what is this new rule? So new rule 37A, what it is actually? Here, my dear friends, please understand, this new rule is going to punish the recipient because the supplier has not filed his GSTR 3B and paid taxes to the government. See, the interesting thing is, when recipient can avail ITC, sir, when the inward supply is reflected in GSTR 2B, obviously we can avail ITC. So you are clear with that, correct? But when the amount will be reflected in GSTR 2B, when the supplier has filed his GSTR 1. But if the supplier has filed his GSTR 1 and it got reflected in your GSTR 2B, but the supplier has not filed his GSTR 3B and has not paid tax to the government, then the ITC availed by you is not correct. So here the government is imposing some additional responsibility on us. What is that additional responsibility, my dear friends? That additional responsibility is, see, look at this. If your supplier has not filed his GSTR 3B on or before the 30th September of the succeeding financial year, understand, see, let me take an example straight away here. The supplier is supplying some goods to recipient on 2nd June 2023 and the value is 10,000, GST on that is 1200 rupees, my dear friends. What supplier has to do? This is happening for the month of June 2023. Supplier has filed June 2023 GSTR 1 and the same is reflected in GSTR 2B. Same has been reflected in GSTR 2B for the month of June 2023 for the recipient. So what recipient will do? Obviously recipient will avail ITC of that amount 1200 rupees. Now what is the duty of supplier? Supplier should also file June month GSTR 3B, correct? But supplier has not filed his June month GSTR 3B even before like 30th September of succeeding financial year, that is 2024. Then here recipient has to face the burden. What recipient has to face? Sir, because my supplier has not filed his GSTR 3B of a particular month for which I have taken ITC, I should reverse that ITC on or before 30th November in any GSTR 3B what I am going to file. On or before 30th November, I should reverse the ITC I have availed for which GSTR 3B is not filed by my recipient, sorry, my supplier. Okay, that means my supplier not filing his June month GSTR 3B here, government is asking me to reverse the ITC what I have availed for that month from that supplier, because he filed GSTR 1 and I got it in 2B and happily I have availed ITC, but that fellow didn't file his GSTR 3B. So government is giving a deadline. If that fellow has not filed his GSTR 3B on or before 30th September of the succeeding financial year to which that 3B belongs to. So in this case the 3B belongs to 23-24 financial year. So 24-25 financial year, September month, that is September 2024 30th date. Before that my supplier has not filed his GSTR 3B for June month. Now I should reverse the ITC whatever I availed on or before 30th November 2024 without any interest. That is one small advantage. But 30th November, if you are not before on or before 30th November, if you are not doing it, you should reverse later on after 30th November with the interest under section 50. That is the interesting amendment, which is imposing one additional burden on recipient. Okay, sir, what if my supplier has filed his GSTR 3B later on? Let us assume in Feb 2025 he is filing June month GSTR 3B, June 2023 GSTR 3B is filing in Feb month 2025. Then see, such a honest fellow, disciplined fellow. Can we re-avail ITC now? Yes, you can re-avail ITC. For this re-availing of ITC, section 16 subsection 4 time limit is not applicable. As I already told you, only while availing ITC, section 16 subsection 4 time limit will come. When you are re-availing ITC, time limit is not applicable. Section 16 subsection 4 time limit is not applicable. You can happily re-avail ITC in the month of Feb 2025. Very good, super. So this is the new rule 37A. Okay. Unnecessarily I have given too much of space here, so ignore this space, don't worry. Next, coming to the next one, 16 subsection 4 time limit for availing ITC. You would have seen this amendment earlier also. So the amendment is, earlier it was like due date for filing September month return of the succeeding financial year or actual date of filing annual return, whichever is earlier. So now they have changed everywhere the due date. This has been brought in concurrence with all the due dates almost. So what is the due date for availing ITC? So any invoice or a debit note belonging to a particular financial year, you can take ITC of that in that upcoming month whenever it got reflected in 2B. By any chance you forgot to take that ITC, you can take that next month. If you forgot that next month also, you can take that next month. So like that, if you keep on forgetting that, what is the deadline to take ITC on that? The deadline is 30th November of the succeeding financial year to which that invoice or debit note pertains to. Invoice or debit note pertains to. Here one interesting thing is there, I'll just share it with you. Or actual date of filing annual return of the relevant financial year, whichever is earlier. Now earlier invoice or debit note, see, debit note will be linked to an invoice. So what is the deadline for availing ITC for the debit note? Means the date on which invoice is given, that financial year only we have to take. But now the law has changed. I will just show you the example here. See, now invoice has been issued on 7th July 2023 on which GST is 1 lakh rupees. You can avail ITC of this GST 1 lakh rupees. Yes, happily you can avail. For that, what is the deadline? Sir, this invoice belongs to which financial year? We should see. This invoice belongs to financial year 23-24. So the deadline for availing ITC of this 1 lakh is 30th November of 2024 or actual date of filing 23-24 annual return. This is fine, good. Sir, but for this invoice we have also issued a debit note. And that debit note is containing GST of 12,000 rupees. What is the deadline for availing ITC of that 12,000 rupees? So first thing we have to see is this debit note belongs to which financial year? Should I take the financial year in which the debit note is issued, or should I take the financial year of the invoice to which this debit note belongs to? So earlier the law was the debit note belonging to which invoice, that invoice financial year we have to take. But now the law has changed in such a way, you take the financial year in which the debit note was issued. So the financial year in which the debit note was issued here is what? 24-25. So the deadline to avail ITC on this 12,000 rupees is 30th November 2025 or actual date of filing annual return of the financial year 24-25, whichever is earlier. Hope you are clear. Now we are delinking the invoice and debit note here, where debit note time limit for availing ITC on the debit note should also be seen from the perspective of the financial year in which the debit note is issued, not from the perspective of the financial year in which the invoice is issued which is linked to the debit note. No. So the point is, take it independently. The debit note is issued in which financial year, the same financial year you consider, and from that point of view you just see the time limit. So another wonderful amendment. So this is regarding 16 subsection 4. Now there are very small things here in 17 subsection 5 blocked credits. They have said that a small clarification regarding this word leasing. So ITC is blocked only on leasing of the ineligible conveyances. If you see, if you purchase certain conveyances like motor vehicles with less than or equal to 13 seating capacity or aircraft or vessels, in certain cases ITC is blocked. Such ineligible conveyances you are leasing, then only ITC is blocked. This leasing is not applicable to any other goods. Leasing is not applicable to any other goods. So here leasing referred herein is only leasing to motor vehicles, vessels, aircrafts which are ineligible for ITC under section 17 subsection 5. They are not to leasing of any other items. Okay, so there is another small clarification here. Next, one more small clarification regarding see, ITC shall be available with respect to food and beverages, outdoor catering, beauty treatment, health services, cosmetic, plastic surgery, leasing, renting, hiring of motor vehicles, vessels, aircrafts, or membership of club, health and fitness center, and travel benefits. Normally these are 17 subsection 5 blocked credits. You cannot take ITC of this, but if these are availed by the employer to provide to the employees as a part of statutory obligation, then ITC is available. So this is again a clarification regarding this. Normally, you know, every blocked credit ITC has common exception. Not every, almost all. The common exception is if it is procured by the employer to provide to its employees under statutory obligation. So this exception is available for all these people who are under 17 subsection 5 clause B. Okay, so that is what the point. Next, you know, 17 subsection 4. 17 subsection 4 is all about the banking companies and financial institutions are allowed to take ITC on all the purchases, all inward supplies, whether or not they are using it for taxable supplies or exempt supplies, but flat 50% reversal they have to do, that you are aware of in 17 subsection 4. So flat 50% reversal should be done at the end of every month. Earlier in the law they said it should be done in GSTR2, but the GSTR2 concept itself is not brought into picture, so they have just changed the wordings from GSTR2 to GSTR3B. That's all. Apart from that, nothing changes there. So this is what another small rule. So 50% whatever you have to reverse, you reverse it in GSTR3B. That is what they are saying here. Okay, so this is what all about chapter number 6, input tax credit amendments. So the next chapter, chapter number 7, registration with respect to amendments. If you see one small amendment here, just like what we have seen in composition scheme, the same here. This fly ash aggregate with 90% or more fly ash content, the same. These people cannot enjoy this 40 lakh threshold limit. You know, normally in registration we have seen threshold limit for obtaining registration is 10 lakh, 20 lakh, 40 lakhs, and these people are not eligible for 40 lakhs limit. And here the amendment is regarding fly ash aggregate. They have removed that 90% or more. Apart from that, nothing. Let us move on to something very interesting here in registration regarding cancellation of registration. See, you might have seen this suo motu cancellation by proper officer. In that, based on various wrong acts done by you or non-compliances, the proper officer can cancel your registration. There they have added certain new points saying that if you are under composition scheme, and not filed your return for a financial year beyond 3 months from the due date of furnishing the said return. That means, see, there is GSTR 4, deadline is 30th April. After this, after 30th April, after the deadline is over, even after 3 months you have not filed your GSTR 4, then they can cancel your registration. Okay, this is one thing. Second one, sir, this is for registered person who is not under composition scheme, who is not, these 2 points are regarding who are not under composition scheme, not opted for composition scheme. For those people, if he is a monthly filer, GSTR 3B is not filed. For a continuous, what is a section 39, you will file return GSTR 3B, so that has not been furnished for a continuous period of 6 months. Or if you are a quarterly filer, for you have not filed that GSTR 3B for 2 tax periods, that is quarters. Okay, so if you are under normal scheme, not filed your GSTR 3B continuously for 6 months, or if you are a monthly filer, if you are a quarterly filer, you are not filed this for continuously 2 tax periods, that is 2 quarters, then your registration can be cancelled by the proper officer. And obviously, when the registration is being cancelled, the cancellation proceedings will go on till the conclusion of cancellation proceedings. That means the department will give you a notice, show me the reason, show cause notice, show me the reason why I should not cancel your registration. So you give the reason, then they will take it up forward, etc., etc. During the pendency of this cancellation proceedings, what will happen? Your registration shall be normally suspended by the proper officer until the conclusion of this cancellation proceedings. So once the cancellation proceedings are over, either registration is cancelled or continued. Both the cases, suspension will be revoked. Clear? That means suspension is taken back. Sir, if it is cancelled, what is the point of suspension? So suspension is taken back, fine. If it is not cancelled, it is continued, then also suspension will be taken back, right? So the suspension will be taken back on the conclusion of the proceedings. So please understand, suspension is deemed to be revoked upon the completion of cancellation proceedings. But if the proper officer feels it is necessary to revoke the suspension even during the pendency of the cancellation proceedings, then also he can do. So it can be revoked by the proper officer anytime during the pendency of the proceedings. These 2 points are obviously already there. Now the interesting thing is, if at all your registration is suspended, why? Because I have not filed the returns, sir. I was irregular in filing the returns. Because of that, proper officer has cancelled my registration, initiated the cancellation proceedings. If that is the case, the moment you file all the pending returns, then automatically your suspension is deemed to be revoked. So but the condition is already registration should not have been cancelled. You are filing all your pending returns after the registration is cancelled, then suspension is not deemed to be revoked. So if registration cancellation proceedings are pending, going on, and it is not yet cancelled, why? Like the cancellation proceedings initiated because you have not filed the returns, not yet cancelled by God's grace or by the officer's grace. Now you file all the returns, suspension is deemed to be revoked. Registration is already cancelled, sir. Now I will file the returns. Now you file the returns and go and beg the proper officer, Ayya, revoke my cancellation order. Okay, so that way, revocation of cancellation, you remember, I guess. So that way you can just go and ask, but automatically suspension will not be revoked. Why? Because registration itself is cancelled now. So if the registration is suspended because of non-filing of returns and registration is not been already cancelled, it is deemed to be revoked upon furnishing of all the pending returns. That is what the concept here, right? Fine. So that is related to cancellation and new conditions and suspension, etc., etc. Now if you see, one more small points added in this registration. When you are applying for registration, if you have seen before, you can do this verification of your mobile number and mail ID of whatever the mobile number and mail ID you give while making the application for GST registration. So in part A, what you will do, you will give the details of the PAN, which will be validated by CBDT database. Mobile number, mail ID will be validated through the OTPs, and there you can give any mobile number, mail ID of your choice. So anybody having the PAN number of a person can give their own mobile number and mail ID and do the verification, etc., etc., and proceed for GST registration, take fake GST registrations. But to avoid such circumstances, what the department has did now they have changed the rules in such a way where mobile number, mail ID you will not be giving according to your will and wish. The mobile number and mail ID you will be giving to the numbers and mail IDs which are linked to the PAN. As per the PAN database, whatever is there in income tax website, the CBDT database, the mobile number and mail IDs, to that numbers only the OTPs will be sent. So you should be very careful. Okay. So the OTP based verification will be done by sending the OTPs to the PAN linked mobile and mail IDs, not to anything what you are providing. Not only this, if you remember, the physical verification by the proper officer will be done normally, correct? When the physical verification of the premises will be done by the proper officer, when you have not opted for Aadhaar authentication, or you have opted for Aadhaar authentication but it got failed, okay, in such cases, or the proper officer feels that it is necessary to visit your premises physically, in these three cases the proper officer will conduct physical verification and grant you registration certificate within 30 days. Hope you remember that. Now one extra point has been added here, sir, where we are trying to use the artificial intelligence here, where the system will throw up based upon the data analysis and the risk parameters identified on the common portal, that is the GST website. The website, when you make an application, give your all details, etc., based upon the risk parameters and the data analysis available with the system will pop up or throw your application to the department saying that in this case you need to do physical verification. Go and do the physical verification of the premises and also establish the identity of this fellow who is applying for registration by doing this biometric Aadhaar authentication. Normally, how do we do Aadhaar authentication? They will send the OTP, the system will send the OTP to the mobile number linked to the Aadhaar number, and that mobile OTP, whatever is there, you fill in the website online, Aadhaar authentication is done. But now what they are trying to do on a pilot basis in the state of Gujarat, they started implementing this, that the system, once you fill the application, even though you have selected the Aadhaar authentication, everything is normally done, if the system says, if the common portal says this applicant shall go through Aadhaar authentication by biometric, that is your biometric way, not just by sending OTP to the mobile number linked to Aadhaar number, then the department will do that biometric based Aadhaar authentication, and also obviously they will make physical verification of your premises, then only they will grant you the registration certificate. So this they will do within 30 days from the date of submission of application, only after physical verification and also obviously biometric based Aadhaar authentication and taking your photographs, all that stuff, normal procedure. This is something really interesting. We have to wait and see whether this biometric Aadhaar authentication will come in the entire country. So let us wait and watch. Yes. Next. So with this we are done with the amendments covered in chapter number 7, registration. And if you see the next one, chapter 8, small amendments regarding e-invoice. Obviously you know the e-invoice threshold limit is now 10 crores. So whose aggregate turnover in any preceding financial year from 2017-18 has exceeded 10 crores, they are supposed to go for e-invoicing provisions. But the e-invoicing provisions are not applicable in these cases. The e-invoicing provisions are not applicable in these cases. And one amended thing is they are not applicable even for government departments and local authority. Not a very latest amendment, but still. And the another interesting thing is these people who are not required to raise e-invoices are supposed to give a declaration on their invoice saying that yeah, hereby we are declaring that even though our aggregate turnover in the any preceding financial year from 17-18 onwards is more than the aggregate turnover 10 crores, we are not required to raise e-invoice because of rule 48 sub rule 4. So that way they should give a disclaimer kind of thing on their invoice. Fine. So that is the amendment there. Next, dynamic QR code. Coming to dynamic QR code, there was a doubt, should we give dynamic QR code for people who are, see, e-invoices will come only for B2B invoices. Dynamic QR code will come only to B2C invoices. dynamic QR code was supposed to be given only for B2C supplies, and the doubt was people having UIN. Should we treat them as B2B supplies or B2C supplies? They should be treated as B2C supplies only, and you should give dynamic QR code on the invoices to them. Why B2C supplies? Because you are having UIN means it is not you are registered under GST law. You got that UIN just for the purpose of claiming refund of the GST paid on notified purchases. Hope you remember that. For some notified international organizations, we will be giving this unique identity number just to claim refund of the taxes paid on notified purchases. This doesn't mean that those people got registered under GST. No, it is not like that, right? So it is a B2C supply, hence dynamic QR code should be given on their invoice. And another doubt was dynamic QR code for what purpose? For scanning that QR code and making the payment. So dynamic QR code will contain the entire invoice value. But what if there was already a part payment made? Already a part payment has been received from the customer. Then the dynamic QR code should be only for the balance amount, where it will show only the remaining amount payable, okay, against the invoice value. But still it is treated as you are following the law. No violation, nothing has happened, don't worry. Small amendments, not that greatly relevant, so don't worry. Let us continue. And the next amendment is, if you remember, we have seen section 16 subsection 4 amendment regarding time limit to avail ITC. The same, like the changes, similar changes with respect to time limits have been brought into picture. Even the time limit to declare credit note in GSTR1, the time limit to declare credit note in GSTR1 is now amended to 30th November of the succeeding financial year or actual date of filing annual return of the relevant financial year to which the credit note belongs, whichever is earlier. So that is the point there. And next, if you see other miscellaneous amendments, guys, I repeat, the similar amendment related to section 16 subsection 4, same time limit even for giving credit note details in your GSTR 1. Next, remember this time limits, it will be there even in your returns chapter also. Coming to other miscellaneous amendments, there was a query regarding, sir, is it compulsory to carry the physical invoice of the copy during the movement of the goods? Normally you should carry the invoice. So during the movement of the goods, is it compulsory to carry the physical copy of the invoice if I have raised e-invoice? If already e-invoice is issued, no need to carry any physical invoice. You will have the QR code on the e-invoice, right? Make sure you are showing that QR code to the proper officer for verification. That will be sufficient. They will take care of it. So that was the clarification. Next doubt was, sir, we are issuing invoice cum bill of supply, whether we should include the particulars specified in rule 46, rule 49 or rule 54 as the case may be while giving this invoice cum bill of supply. When invoice cum bill of supply will come into picture? When you are making both taxable as well as exempt supplies, you can issue invoice cum bill of supply. Then obviously you should follow the rules regarding particulars of tax invoice, particulars of bill of supply separately, whatever has been given. Those things obviously should be present in your invoice cum bill of supply. That has been clarified. Okay, this is one interesting point here. We have seen here few people who are exempt from raising e-invoice, correct? So these people are exempt from raising the e-invoice, right? Whether these people are exempt from raising the e-invoice as a whole or for any some notified supplies was the doubt. That is, sir, certain category of people you are exempting from raising the invoice. Wholly they are exempt from raising the invoice, or only for certain category of supplies only they are exempt, was the doubt. So what is the answer for this? The department has clarified, as a whole they are exempt from raising the invoice. It is not for certain specified category of supplies. As a whole they are exempt from raising the invoice. The entity entirely exempt from raising the invoice. Clear? So that is what the concept. So the last clarification regarding this chapter number 8, sir, should we raise e-way bill when we are transporting the imitation jewelry? Why you got this doubt? Because certain types of goods, if you are transporting some notified goods, if you are transporting, you are exempt from raising the e-way bill. You are exempt from raising the e-way bill. So if you see that items in that, one such item is transportation of jewelry, goldsmiths and silversmith wares and other articles of chapter 71. So here the doubt was, should I raise the e-way bill if I am transporting imitation jewelry also, or it is exempt? Now they have made a clarification saying that the imitation jewelry, if you are transporting, please raise the e-way bill. For you this relaxation is not applicable. So like that they have given the notification. So the point is, if you are transporting imitation jewelry, you should raise the e-way bill. Please note it down, very important, can be tested. Fine. So that is what all about chapter number 8, amendments. Now let us move on to the next chapter. So my dear friends, if you see chapter number 9, the tax invoice credit debit notes e-way bill, sorry, extremely sorry, so this is payment of tax, chapter number 9. Payment of tax. So if you see the amendments in this chapter, see first one is regarding transfer of e-cash ledger balance to a distinct person. See, normally you know that the e-cash ledger will be having minor heads and major heads. Every major head will be having the minor heads, and you already knew that the balance in any minor head of any major head can be transferred to any minor head of any major head. So if there is balance available, e-cash ledger balance available in IGST tax, you can transfer it to CGST late fees, you can transfer it to SGST penalty, like that. From any minor head of any major head, balance can be transferred, e-cash ledger balance can be transferred to any minor head under any major head. That was obviously there earlier. Now the amendment what we are going to see here is, not only that, if at all I am having a different registration, my distinct persons, my unutilized e-cash ledger balance of one registration can be transferred to another registration. Now see, for example, Vishnu Vardhan is registered in Delhi, Vishnu Vardhan is registered in Tamil Nadu, both. Now Vishnu Vardhan registered in Delhi and Vishnu Vardhan registered in Tamil Nadu, both are same persons, but for the law we treat as distinct persons. So here my e-cash ledger balance in Tamil Nadu, I can transfer to the e-cash ledger balance of Delhi. But the condition is, from which e-cash ledger, which registrations e-cash ledger you are transferring the balance, there first you should not have any liability. Quite obvious, when I am transferring my e-cash ledger balance from Tamil Nadu to Delhi, first in Tamil Nadu I should not have any liability, then only I can transfer. No, otherwise what is the point of me transferring the e-cash ledger balance to Delhi? So whenever you are transferring your e-cash ledger balance to another distinct person, then make sure your liability is zero, then only you can do it, otherwise you cannot do it. Here they have given can be transferred to major heads IGST and CGST, because we are reading this CGST Act. Of course is GST also. Am I clear? So the amendment, interesting amendment, is unutilized e-cash ledger balance of one registration of the person, same person, can be transferred to another registration of the same person. So between the distinct persons you can transfer the e-cash ledger balance, unutilized balance. But before doing that, you should make sure your liability is zero, then only you can transfer it to the other fellow, other registration, right? So that is what the interesting amendment. Now this is section 49 subsection 12, which is a new subsection. This is nothing but, you know, rule 86B, where there is a restriction that you cannot use your ITC ledger balance more than 99% of the liability. That means at least 1% of the liability should be discharged in cash. Out of the gross liability of 100 lakhs, let us assume, even though you have 110 lakhs ITC balance, you cannot use that 110 lakhs ITC balance fully. You should use only 99 lakhs of your ITC balance, and balance 1 lakh should be paid in cash. That is rule 86B. To just give a legality to that rule, they are bringing this subsection. Apart from that, no new concept involved here. Only thing, government is getting the power to restrict the utilization of e-credit ledger balance. That's all. Apart from that, nothing is there in this subsection. So this is just validating rule 86B. We can just say that way. Am I clear, my dear friends? Now let us move on to the next one. Another simple one, depositing in e-cash ledger. For depositing the cash in e-cash ledger, obviously we had various options: internet banking, credit card, debit card, next NEFT, RTGS, over the counter payment, all these things. Apart from that, they have brought in IMPS and UPI modes also. So these modes are the new modes which have been added. So that is the amendment here to deposit cash in e-cash ledger. Next, let us move on to the interesting amendment which was there even for the previous attempt also. They have not tested any question, and I was just checking any question will be there in RTPs. Even in RTPs they have not given any question on this, but still we'll see some example for your CA intermediate standard. So what is this concept all about? So here the next one is interest on ITC wrongly availed and utilized. Earlier the concept was only focusing on if you have wrongly availed ITC, you should pay the ITC back. That is, you have to reverse the ITC along with interest from the date of availment of ITC till the date of payment. But now they have amended the law in such a way, availing is not important. If you have availed the ITC, you should have utilized it. Only if you have utilized that ITC, then only you are supposed to pay interest. You have to repay back that wrongly availed ITC, that is for sure. But when you are reversing that wrongly availed ITC, you should also pay interest only if you have actually utilized that ITC. So here they have made certain rules regarding the calculation of interest, and remember interest rate is 18% for you. Okay, so now the manner of calculating that interest, if you see rule 88B, see obviously you know this first two cases where there is delay in filing of return and hence there is delay in payment of tax. That means you have paid the tax but paid it late. Whatever is actual amount payable, that much amount you have paid but paid it late. Then the interest shall be calculated from first day after the due date for filing that return. See, return has been delayed, GSTR 3B. Let us assume July month GSTR 3B, 20th August you should file, on or before 20th August. You are filing it 25th August. 5 days delay happened. So from 21st August till 25th August, 5 days till the date of payment, on what amount you should pay interest? On the net GST payable in cash you should pay interest. So here net GST payable in cash you should pay interest. But sir, any other cases, let us assume we have discharged 1 month liability but not discharged it fully. Let us assume our GST payable is 1 lakh rupees, we have paid only 70,000. The balance 30,000 whenever you are paying, on that fully you have to pay interest. So from the first day after the due date till the date of payment on gross GST liability. But here if you see in the first case, you are supposed to pay interest only on net GST liability. This was already the existing concept only, my dear friends. You have some problems also in your textbook, all that stuff. So please make sure this is not something new for you. This is already discussed in class also. So these are the old things. Now the point is, if the ITC is wrongly availed and utilized, then how the interest calculation shall be done? See, the interest will be calculated from the date of utilization. We have already discussed it is not wrongly availed ITC alone. ITC wrongly availed and utilized. So from the date of utilization of ITC till the date of payment or reversal, whatever you call it, on what amount you should pay interest is the interesting thing. So the amount of interest shall be calculated only on what? Only on the ITC which has been utilized, not on the fully wrongly availed ITC. Only whatever the ITC wrongly availed, out of which whatever you have utilized, only on that amount the interest shall be calculated. So if you see here, the interesting thing is how to calculate that amount. What is the amount on which ITC to be interest to be calculated? ITC which has been wrongly utilized. From which date it should be calculated? From the date of utilization of ITC. Here sir, what is the date of utilization of ITC? That is important. Date of utilization of that wrongly availed ITC is actual date of filing or due date of filing. Here it should have come actually this. actual date of filing or due date of filing, the return through which the shortfall has taken place, the return through which the utilization has happened. See, the amount how you will calculate, on which interest should be calculated. You have availed ITC an amount. That much amount, if it is lying in your e-credit ledger, it is not utilized. If there is any shortfall, that means there is utilization. Let us assume 50,000 you have wrongly availed ITC. Always your closing e-credit ledger balance is 50,000 only, or more than 50,000. That means you have wrongly availed 50,000 ITC and closing e-credit ledger balance is always 50,000 or more than 50,000. That means you never utilized your wrongly availed ITC. I will show you an example. Just listen to the theory. So, wrongly availed ITC utilized means what? The shortfall in the e-credit ledger balance. Now, when it has happened, sir, actual date of filing or due date of filing of the return in which utilization took place. Okay, now see, for example, listen carefully. Let us see, for example, these are the months given here. Okay, April, May, June, July. Now I have given you the opening balance of ITC. Second. I have given you opening balance of ITC. What is the ITC eligible? What is the wrongly availed ITC? What is the total ITC? So that wrongly availed ITC plus eligible ITC. What is the liability paid using ITC? What is the closing balance of ITC? I have given here. Now I just try to keep it as simple as possible for your level. Now, I mean CA intermediate level. Now let us start from April, keeping it as simple as possible. Let us assume your opening ITC balance is 0. How much ITC you are eligible to avail? 1 lakh rupees. How much ITC you have totally availed is 1,50,000 rupees. Why? Because you have wrongly availed 50,000 ITC. You are eligible for 1 lakh ITC. Along with that, you have wrongly availed 50,000 as ITC. So total your ITC is 1,50,000 rupees, and your liability paid using that ITC is 80,000. That means you have ITC balance 1,50,000, liability paid is 80,000. So what will be the closing ITC balance, e-credit ledger balance? 70,000. If you see, you have wrongly availed 50,000 ITC, but still your e-credit ledger balance is 70,000, which is greater than or equal to that wrongly availed ITC, correct? That means, can I say that 50,000 wrongly availed ITC is still sitting in this 70,000, still it is there in your e-credit ledger only. You have availed it but not utilized it. Can I say that way? So please understand, here in this case you have wrongly availed ITC but you have not utilized that. So here interest will not come from this date, from April month. Okay, so next month, May month, 70,000 will be the opening balance. 50,000 I am eligible for ITC. Wrongly nothing has been availed. Total ITC available is 1,20,000, 70 plus 50. Okay, and now if you see, using this 1,20,000, I am discharging how much? I am discharging 60,000 liability. How much is the closing balance? Closing balance is again 60,000 only. That means now if you see, closing balance is greater than or equal to 50,000, greater than or equal to 50,000. So still that means what? I have not utilized that 50,000 wrongly availed ITC. Now also interest will not come into picture. Next month opening balance 60,000, ITC eligible 30,000, ITC totally I have is 90,000, but liability is 60,000, and if you see my closing balance now 30,000. So 50,000 wrongly availed ITC has been utilized. How much utilized? Wrongly availed ITC minus closing e-credit ledger balance. Wrongly availed ITC 50,000 minus closing e-credit ledger balance is 30,000. That means it is positive figure. That means you have utilized the wrongly availed ITC. So how much you have utilized? 20,000 you have used. That is why e-credit ledger balance became 30,000. So you have wrongly availed 50,000 ITC. So now e-credit ledger balance is showing only 30,000. That means what about the balance 20,000? You have used it. From this the interest calculation starts. So what should I see here? Sir, which month GSTR 3B you have used this amount? Sir, June month GSTR 3B, when you are filing, you have used this wrongly 20,000 ITC, whatever has been availed wrongly, that has been utilized here 20,000. Which month 3B ra? GSTR 3B of June. Now, what should I see? What is the date of utilization? Sir, date of utilization is actual date of filing the GSTR 3B of June month or the due date of that month, whichever is earlier. So, if you see 15th July I have filed it, sir, actually, even though due date is 20th July, 15th July only I have filed. So I should see 15th July or 20th July. Guys, we are seeing date of utilization of ITC. When it will start, sir, it will be like the actual date of filing the GSTR 3B for the month in which the utilization has happened, or the due date of filing that 3B, whichever is earlier. 15th July or 20th July, which is earlier? 15th July. So interest will start from the next day, that is 16th July. From 16th July, okay, the interest will start. And I have understood that I have wrongly availed 50,000 ITC in the next August month. August month GSTR 3B I am filing on 18th September. So I am trying to rectify my mistake. Guys, understand, you have utilized 20,000 ITC. Wrongly 50,000 you have availed ITC in the month of April. In that 20,000 you have utilized in the month of June GSTR 3B, and finally you have identified that during when you are filing August month GSTR 3B, interest should be calculated from the actual date of filing June 3B or due date of June 3B, so which is earlier, till the date of payment. Payment is done through August 3B. August 3B you are filing on 18th September. So interest calculation will come from 16th July to 18th September. So that is for 65 days. 20,000 into 18% into 65 divided by 365. If you see, 641 rupees is the interest. Understand, only 641 rupees interest you will not pay in August month GSTR 3B. You should also repay that 50,000 wrongly availed ITC. Please understand that you will repay wrongly availed ITC 50,000 along with interest of 641 rupees. Hope you are able to understand this. How do we calculate the interest? We calculate the interest by seeing how much wrongly availed ITC, in that whatever has been utilized. When I can say it is utilized, when the e-credit closing balance, e-credit ledger closing balance falls below the wrongly availed amount, that means you have utilized the wrongly availed ITC. So the example is crystal clear. So that means you have utilized the wrongly availed ITC. When you have utilized, when can I say, using which 3B you have utilized this? That 3B's actual date of filing or due date of filing, whichever is earlier. Suppose here June month 3B you have filed on 24th July. What should I take? 20th July or 24th July, whichever is earlier. 20th July. So if you are filing the return late also, interest is not lost for the government. If you are filing early also, interest is not lost for the government, whichever is earlier. Okay, so the 3B in which you are using this wrongly availed ITC, that due date of that 3B or actual date of filing that 3B, whichever is earlier, from that date till the payment, from that date till the payment, what you should do? You should make the interest calculation at 18% per annum. So how I will, when I will pay interest? Only when I came to know that okay, wrongly I have utilized something. I came to know that wrongly I have availed ITC 50,000 rupees while filing August 3B. So on 18th September, I am repaying the entire 50,000. That is by reversing it in the e-credit ledger balance or by paying cash. I am reversing it along with the interest. Along with interest, 641 rupees I have to make the payment. So that is what the concept. Hope it is clear for you. So that is what all about this chapter number 9, important amendments, and some miscellaneous clarifications were there that you can just go through, not a big deal. Okay, or let me finish it off. So the miscellaneous clarifications, if you see the first one, obviously the e-credit ledger balance cannot be used for discharging the RCM liability. RCM liability, whatever you have to discharge on your inward supplies, should be paid only by cash. And not only that, it cannot be used for paying interest, penalty or fees or any other amount. ITC balance, e-credit ledger balance, can be used only for payment of tax. That is a quite obvious fundamental thing which we should be knowing. And any refunds which has been sanctioned to you erroneously, then that refund also should be paid back by cash, my dear friends. Please understand that. And obviously cash ledger balance you can use for paying tax, interest, penalty, fees or any other amount. That is obvious, you know this. These are not great things, but here one small point here is, see, normally whenever you are making the payment of cash into the e-cash ledger, obviously immediately, instantly it will happen. You make the payment and from the bank servers, obviously it will reach the GST portal, the website common portal, and then obviously it will be reflected in your e-cash ledger. But by any chance, if due to any network issues or whatever the things, if it is not immediately reflected in your e-cash ledger because the information is not passed on to the GST website, the common portal, then what will happen? See, normally whatever the payments are made to government, the tax payments, the banks will maintain that in the form of e-scroll and they will file it with RBI. Okay, so next day what will happen, even though that immediately if the cash ledger is not reflecting the balance because of some technical issues, next day that e-cash ledger will show the amount whatever has been paid because of the records which has been taken from e-scroll of the RBI. So that is what the concept. This was happening from the beginning, just they have now incorporated that in law. So any payments fail normally, like payment has been deducted from your account, but immediately it will not be reflected in your e-cash ledger. It will be reflected next day based upon this e-scroll of the RBI, where the banks will be maintaining the details and filing with RBI regarding the tax payments, right? So that is what all about chapter number 9, payment of tax. Now let us move on to the last chapter, chapter number 10, returns, the amendments related to this. And the first amendment is regarding section 37, that is GSTR1. You know that whenever you are filing any GSTR1 and you have committed any errors or omissions in that, you can rectify that. That rectification date deadline has been changed now. I told you already, every deadline we are bringing in parallel with section 16 subsection 4 time limit. The same story, 30th November of the succeeding financial year or actual date of filing, annual return of the relevant financial year, whichever is earlier, right? Next, there is one more point. If you have not filed GSTR1 of one period, you cannot file the subsequent periods. That means without filing June GSTR1, you cannot go with July GSTR1. Simple thing, obvious. Cannot file. But government may, on the recommendations by the council, can make you to file. That is the crazy proviso here. Okay, let us not worry, the government has not yet notified anything like that. And who are debarred from filing GSTR1 or IFF, my dear friends? This is important. See, if you have not filed your GSTR 3B of the preceding month, or you are a person who has opted for QRMP scheme, not filed 3B for the preceding tax period. Sir, last GSTR 3B not filed, na? Now GSTR1 you cannot file. Guys, I'll tell you something fundamental. See, this is how the sequence is. Normally GSTR 1 you file, then you file 3B, then you file 1 of the next month, then you file 3B, then you file 1 of the next month, then you file the 3B. This should go like this. The series should go on, 1 or IFF, whatever it is. So if you have not filed this 3B, next one you cannot file. If you have not filed this one, this 3B you cannot file. This 3B you have not filed, 1 you cannot file. So please understand that the series should continue, the sequence should go on. GSTR 1, 3B, 1, 3B. Even though if it is not GSTR 1, IFF or whatever it is. And then file 3B. If any sequence has been broken, you cannot continue it. So without filing GSTR 1, you cannot file 3B. Without filing 3B, next period 1 you cannot file. So that goes on. Please remember this. This is the fundamental change which has been made in the law at the respective places. You might not be reading that at respective places, but this is the conclusion. Please understand. The sequence should go on. GSTR 1 or IFF should be filed, then only you can file the 3B. 3B should be filed, then only you can go with GSTR 1 or IFF. So that is the sequence. Okay, fine. And one more thing is there, like you are debarred from filing GSTR 1 when you are not following this rule 88C, the new rule. So this one I'll just tell you here. So in rule 88C, they have given you some amount which has to be paid, the intimation that has been not deposited by you, then you cannot file your GSTR 1 or IFF. Or you have furnished a reply explaining the reasons for the amount not paid. Sorry, you have not given reply. You have not given a reply for the intimation, or you have not paid the cash. So in both the cases, you cannot file GSTR 1. This one you remember there. See, already there are 2 points where you cannot file GSTR 1 if you have not filed the preceding 3B, or if you are under QRMP scheme, you have not filed preceding tax period 3B. And here 88C, you have got an intimation. For that intimation, you have not paid the cash tax amount, or you are not even given the reply. In these cases, you are debarred from filing GSTR 1. I will explain what is rule 88C, just trying to connect the concept. When you are not allowed to file your GSTR 1 or IFF, number 1, not filed preceding month 3B. Sir, I am under QRMP scheme, sir. Okay, preceding tax period 3B you have not filed, then also you are debarred from filing GSTR 1 or IFF. Next, rule 88C, according to that, you got some intimation from the government. There is a difference between your GSTR 1 and 3B. So please explain the differences and pay the tax liability. Like that, you got the intimation. You have not paid the tax liability, or you are not even replying to them. In these cases, you are debarred from filing your GSTR 1 or IFF. Okay. Now, one more super duper amendment, section 38. Section 38 GSTR 2B, obviously when ITC is reflected in your GSTR 2B only you can avail ITC. That is quite obvious. There is one super duper amendment here where, of course, that has not been being operational as of now, but this amendment says, see, whatever the inward supplies reflected in your 2B that is available for you in GSTR 2B, that you can take. But whatever the details of supplies which credit cannot be availed wholly or partly by the recipient, because that such supplies are being furnished in GSTR 1 by a registered person, like that they have given some conditions. That means they are trying to say that even though your supplies, inward supplies, are reflected in GSTR 2B, they have been reflected in GSTR 2B because of a person filing GSTR 1. Which type of person? See, simple, I'll tell you the fundamental thing here. Your supplier from whom you have made the purchases, that fellow is a stupid fellow. So you are purchasing from him, even though he is filing GSTR 1, even though that is reflected in your 2B, you are not eligible to take it as ITC. That means because of the wrongful acts done by your supplier, you are going to suffer in future. That means you should see this. You just like when you are getting married, they will do background verification, or when you are going for a job, they will do background verification, right? The same way here, you should do background verification when you are making some purchases from anybody under GST, whether this fellow is a good supplier or not, whether he is filing all his returns properly or not, paying his taxes properly or not. Like that, you should do a background verification for the supplier from whom you are purchasing, and then proceed. Okay, so now see, from which type of person if you purchase, the ITC will not be allowed for you? By a registered person. So the supplier, your supplier, who has taken a registration within such period as may be prescribed. That means very recently registered, See, they have not yet prescribed anything. If at all they have, you have purchased something from a person who has made a registration within such period as may be prescribed, or who has defaulted in payment of tax, and the default has continued for such period as may be prescribed. That means you have purchased from a supplier who has defaulted in payment of tax. For how long, sir? That they have not yet notified, but I will notify later on. So for such tax period, whatever has been notified, till that you have not, your supplier has not paid the taxes, or whose output tax payable as per GSTR 1 filed by him is more than the output taxable payable by him during the said period by such limit. That means as per GSTR 1, his tax liability is more, but whatever he paid is less. How much? So much percentage. How much percentage? So much percentage. That much percentage, which has not been notified, government can notify. That means his variations in tax payments are too high. Then also they will say, hey, you have purchased from such idiot, you cannot take ITC. Like that, government can come with the notification. Next, you have purchased it from a person during such a period as may be prescribed. He has availed ITC of an amount exceeds the credit that he has can be availed. Look at this atrocity. Leave about his payment of taxes varies in more than the prescribed limit. Even if he has wrongly availed ITC, then like he has availed more ITC than what he is eligible of, then also your ITC will be blocked. That means, see, you are purchasing from a person who has taken ITC more than what is eligible, more than a prescribed limit. From such fellow we are purchasing, and he is filing his GSTR 1, and our purchases are visible in GSTR 2B, still we cannot take ITC of that. Super, very good, extraordinary point. Who has defaulted in discharging his tax liability in accordance with the provisions of section 49 subsection 12. I told you, new subsection, that is just to give a legal backing to the rule 86B that you have violated, or such other class of persons as may be prescribed. That means apart from above conditions, some super duper conditions I have brought into picture, no, apart from those conditions, anything else if I want to put up in future, I can just put up them. Okay, fine, super, extraordinary point. But however, that may not be like relevant for you as of now, which is not yet operational. Okay, coming to the next amendment, section 37 we are done, 38 we are done, we are into 39. 39 is also same like GSTR 1. For any errors or omissions committed in GSTR 1, you have a deadline to rectify. Same way, any errors or omissions committed in GSTR 3B can also be rectified by what time? The deadline is the same, 30th November of the succeeding financial year, or actual date of filing annual return of the relevant financial year, whichever is earlier. The same thing, the same thing. And this point also I have told you already. If you have not filed GSTR 1 of the previous tax period, current tax period, GSTR 3B you cannot file. I told you, no, 1 3B, 1 3B, this sequence should go on. But government can allow you to file GSTR 3B even though you have not filed GSTR 1, if at all it feels so. Okay, next, amended section 41, rule 37A. We have already discussed this, guys, in chapter number 6. I taught you that rule 37A, where you know, like, you have availed ITC because your supplier filed GSTR 1, it is reflected in your 2B. But your supplier has not filed his GSTR 3B on or before 30th September of the succeeding financial year. So you should reverse that ITC on or before 30th November without interest. After 30th November, if you are filing, reversing that amount, then interest shall be paid. And whenever he is filing 3B, then again you can re-avail ITC, already discussed concept. Okay, fine. Now, maximum late fees for delay in filing annual return. Just like how you have seen maximum late fees for filing the normal returns, they have also even rationalized this maximum late fees for delay in filing annual returns. That is, if your aggregate turnover is up to 5 crores in the relevant financial year to which this annual return belongs, your late fees is rupees 50 per day, that is 25 CGST is GST, or 0.04% of the turnover in that state, that is 0.02%, 0.02%, whichever is higher. Sorry, it is not earlier. Whichever is higher. Whichever is higher, it is not whichever is earlier. I'm extremely sorry. So if your aggregate turnover is up to 5 crores, that means can we say 0 to 5 crores, and here it is more than 5 crores but up to 20 crores, and if it is greater than 20 crores. So if it is 0 to 5 crores, the maximum, this is maximum late fees, guys. So maximum late fees will be 50 rupees per day or 0.04%, whichever is higher. So the late fees has been rationalized. So per day that will go on 50 50 50 per day, or turnover 0.04%. Sorry, not a maximum, just late fees. Okay, fine. Next, more than 5 crores but up to 20 crores, then 100 rupees per day, 50 50 per day under CGST, SGST, or 0.04%. This 0.04% is same in all the three cases. But if your aggregate turnover is more than 20 crores in the relevant financial year, then daily penalty, daily late fees is 200 per day, 100 rupees under CGST, 100 rupees under SGST. Am I clear? This is what the late fees for delay in filing the annual return. Okay. Now the last rule here, the last rule, rule 88C, simple, nothing but see, understand, you are filing your GSTR1 and GSTR3B. So whenever you have filed your GSTR1 or IFF and GSTR3B, but the amount of tax payable is more in GSTR1 than the amount of tax payable in 3B. So it is simple. Tax payable is, I can say, greater than tax paid. Simple. In 1 you are showing how much is payable, 3B you are paying. So GSTR1 liability is more, 3B liability is less. In such cases, what the system will do, what the portal will do, portal will give an intimation electronically for your registered email address. Okay, then based on that intimation, what you should do, you should pay the differential amount along with interest under section 50, or give an explanation like giving the details within a period of 7 days. Guys, there is a difference between your GSTR1 liability and 3B liability. Both should say the same thing, but there is a difference. So what the common portal will do, common portal will trigger a notice to you, intimation to you. Okay, so when it gives an intimation to you, what you should do, you should pay the difference amount if it is actually payable along with the interest. Or if there are any explanation, what are the reasons, you give the explanation within 7 days why the difference has come, because of any credit notes, etc, etc. Okay, so now the same thing here, the same point. Okay, either pay the amount, differential amount, or furnish a reply. Okay, now if the said amount suppose if the said amount remains unpaid, or explanation is not given, or explanation is given but it is not found acceptable by the proper officer, then that means you gave the explanation, he is not happy with that, or you have not at all given the explanation, or you have not at all paid, none of these things you have done, or any of these things happen, then they will recover it as per section 79, which you will see in your CA final level. So that is what the point. And I already told you, if this is the case, see, explanation amount not paid, explanation not given, or explanation is not satisfactory, then they will start recovery. But you will not be allowed to file GSTR1 only when you have not fully paid or not at all given explanation. If the explanation given is not satisfactory, then you will be allowed to file GSTR1 or IFF. That is there. Only if explanation is not given at all, or no tax has been paid at all, then only your GSTR1 and IFF is blocked. You cannot file them. If you have given explanation but it is not satisfactory, then it is his problem, proper officer's problem. So you will be allowed to file GSTR1 or IFF. So that is what with respect to the amendments which is there for you. See, understand, if you see ICAI statutory update, the number of pages are too high. This is just 40 pages update, and in this 40 pages also roughly 10 pages will be going for like extra space for examples or the empty pages, all that stuff. So it is hardly a 30 pages statutory update material whatever has been given, and this is properly covering all the updates which are all the amendments which are there in your statutory update. So nothing to worry, just go with this. This is more than sufficient for all your amendments. And thank you so much for watching the video, and this is your Professor CA Vishnu Vardhan signing off, wishing you all the very best for your exams. Thank you and Jai Hind.